Okay. All right. So an investment advisor should develop an investment policy based on the needs and objectives of the client. When the client is a business entity structured as general partnership, the investment policy would have to consider.
Well, I'm going to immediately throw out A and D.
I love it. That's exactly right. Throw A and D out of there.
The liability of the general partner or the objectives of all. Um, I would say C.
Excellent. Excellent. Yeah, that's like sometimes they're difficult to deal with, right? Because you got,
Yeah.
more person. Alpha Enterprises pays a quarterly dividend of 15 cents and has earnings per share of 240. Assuming that payout rate is continued, what is the dividend payout ratio?
I'm going to say C. I mean, I would maybe take a little bit more time on it. My biggest issue is answering questions too quick as you'll go, but so
No, yeah, I
15
think you're on
cents.
the right. First, I would tell you that this is in the same category of net present value and all that other stuff, analytical methods. And so anything you can get like this right will, pay for the deficit. You're absolutely correct. It's 25%, 15
Okay.
times four,
Yeah.
right? That's going to be the 60 cents. 60 cents divided by 240. The other thing I would tell you is that if you can't decide what to do, I'd be doing you a great service to cover every key on your calculator except the divide key. If you are
Yeah.
not dividing, you're doing something wrong. And if you can't remember what to divide, you take the first number divided by the second number, and that takes care of most of the math, right?
Agreed.
The Uniform Securities Act provides that the state administrator may deny the registration of a broker dealer for all the following reasons, except.
I mean, A would jump right off the screen at me immediately.
Trust your judgment. That's exactly right. We'd never get
Yeah,
any people in the business, right? If you have to be, that
of
would be
course.
catch 22, right?
Yep.
So, yeah, by the way, that's very testable. This idea that, you are qualified by passing the exam, not by doing other things. Which of the following is true of the consumer price index? Not true. Oh, my bad. Not true.
So C is, or excuse me, B is definitely true.
That is definitely true.
C is definitely true.
That is true.
The CPI measures the rate of increase, decrease. CPI measures the increase or decrease. With respect to the level of wholesale prices. I mean, I would go D.
You missed this one. It's actually A.
A. Okay, yeah, it came down.
Yeah,
They both look very
that's what makes
similar in the
Yeah,
answer.
it's not A. I wouldn't worry about this question on the actual exam. I would know that the consumer price index is used to measure inflation. I would definitely know it's also used to adjust the principal on a tip semi-annually. So, if the consumer price index is 8%, then the US Treasury says, okay, we're going to adjust the principal you owe you accordingly. I would know that tips keep pace with inflation. I would know that common stocks are the best inflation hedge over the long term. So you will see this. Sometimes they'll also ask about this concept of your real rate of return, where you simply minus the CPI, where they say your client got a 5% return, CPI was 8, and you come up with -3. You say, okay, well, we didn't really get anywhere because we were able to buy less products and services. So it'll be in the context of question rather than as is it you see it here. Which of these is not considered systematic risk? Not considered systematic or systemic risk.
So systemic risk is for me market risk. When I think systemic risk or unsystemic, I always think a single stock risk for some reason.
I like that. I like that. I would just add to that uh, diversification. If it's not systematic risk, we can mitigate it through diversification. So there's a tendency of securities prices, you're right, stocks, but bonds as well, right? Interest rates
enough.
go
Yeah.
up, bonds go down. So there's a tendency of securities prices to move together, risks in the system, crash risk. It's where I think of it when bad things happen to good investments, right? So
Yeah. Okay. So I guess what the question is telling me is what could not be diversified, right?
no, it's the opposite. What is
Oh,
not,
okay.
which of these is not considered? Now, I would tell you, Kaplan, Past Perfect, SDC, all of those test prep vendors know that NASA exams, my God, the grammar and phraseology is really bad. And so, and they try and model it accordingly. So which of these is not considered? So 3 of these are, 1 of these are not. And that means 1 of these you can avoid by diversification.
Yeah, you're gonna help me with this one because honestly, I
Yeah.
feel like I can diversify what well default risk. Yeah, I
Yeah.
mean honestly, that's where I was leaning, but
Yeah.
I
Right.
feel like I
Because,
could diversify away exchange rate risk, right? And
well,
I can
yeah, you
diversify
can.
away
It's harder to
purchasing
do.
power.
Well, yeah, but it's harder to do. It's harder to do. I mean,
Okay.
you could, but it's harder, right? So you were right about your A choice. Purchasing power risk. Well, maybe I led you down a primrose path there by saying tips and common stock, but you're still at risk there with purchasing power. Those are ones that we consider to be non-diversifiable risks that you're going to be exposed to those no matter what you try and do.
Yeah.
I think it'll be pretty straightforward on the test. By the way, your version was actually the more testable version. Is this idea of there were 10 equally suitable stocks? I picked one of the 10, the other 9 did fine. What did I get exposed to? Non-systemic or selection risk? How do I avoid that? Diversification. Easy way to diversify is on mutual funds. Same thing here with a bond, right? If I buy a muni bond fund, I've diversified the credit risk, but I haven't diversified the interest rate risk.
Makes sense. Okay.
Federally registered investment advisors. So certainly, Prudential is
Mm-hmm.
are obligated to maintain certain books and records as specified by the SEC. Which of the following statements regarding investment advisor record keeping is not true?
I would say A is not true because I
That's
think it's 5 years.
excellent, excellent. We want to get all the aim and shoot questions we're entitled to, right? So the
Yep.
3 styles of questions you get are recognition, practical application, and judgment. And we want to save our misses for judgment, right? Practical application, a lot of people are fearful of that. But on the real test, I'd be surprised you tell me you use your calculator more than 3 or 4 times. The vast majority of debrief I get is 3 or 4. And then when I get somebody who's math phobic, they swear they had 130 of them. I don't believe them, but it's whatever you're fearful of. So you nailed it. 5 years since you nailed it. I'm going to kind of poke around your brain housing group a little more. What is the record retention for readily accessible records?
I think it's 2 years.
Excellent, right? So if I'm an examiner, I say, I'll be back tomorrow, same time. I expect you to have that record.
Yep.
If a woman owns 9% of the common stock and her spouse owns 2% of the common stock and wishes to sell his shares, which of these is true?
Um, I would say, I guess 1 in 3
Excellent. Husbands and wives are
are,
always
combined.
that's always right. What's the point of getting married if you're not going to act in concert? Right. We
Yep.
had a legendary person in our business. Her name was Mary Meeker, and she was the head of research of Morgan Stanley. And when she left, they were interviewing her. She's now, still a living legend, but she's a partner at Kleiner Perkins venture capital firm. And they asked her about her days at Morgan Stanley. I thought she was going to fondly reminisce about, her days at Morgan Stanley. And what she said is, I don't miss it at all. And my husband is so much happier because, he had to comply with Morgan Stanley's internal house requirements, which really kind of jammed him up. And so when I told him I was leaving, he said, hallelujah. Right. So,
Yeah, nice.
under SEC regulations, publicly traded reporting companies are required to file all the following except.
Publicly traded. So I know they have to file 10Q and 10K. So I would
That's right.
immediately
10Q is the
delete those
quarterly
two.
report. You're correct. 10K is the annual report. You are correct.
And one of them is okay, so not required to file all the following except one of them is for like, oh shit, I can't remember. I just saw, well, 8K is like some kind of material change with the company, I
That's
believe.
correct. You nailed it. You
Yep.
absolutely nailed it. A material current event.
Yep. So they would have to file that. So I guess D, I mean, the process of elimination,
That's
I'd say D.
That's right. D is filed by investment advisors with 100 million or more in assets under management. They file it quarterly. And this is a great reading, right? You get to read what Berkshire Hathaway is doing. They dump some of their Apple stock and they dump some of their Bank of America stock. So if you have that 100 million threshold as assets under managed and discretionary assets, you're filing 13F. Now, more importantly for us, if you have $100 million in assets under management, we would need to file 13F, but we should also know that means we're a federally covered investment advisor. Right. So
F for federal. Yep. Nice.
That's right. Right. So that's that $100 million number is testable about the 13F filed by investment advisors. That's tough, but more testable is this idea: if you have 100 million or more, you're a federally covered advisor. So
And I hope a question comes up about the mid-size investment advisor, because I still can't wrap my head around the fact that if I have 100 million or more, I got to register with or I have the opportunity to register with the SEC or the state. But if I have 25 million as a mid-size, I'm also required to register with the SEC. I guess I'm missing something there.
You are no, because 25 million you would register with any state in which you have a office or you have more than 5 customers. You're never registering with both. There is no situation in which an investment advisor is going to register with both the SEC and the state. Now that's different than the investment advisor rep. That's a different thing, but
Yeah. Okay.
AK, one more point about AK. You were right. It's a material current event. This also can be used, AK, to correct a inadvertent violation of Reg FD. So Reg FD means you're not allowed to make selective disclosures as an issuer. And so if you accidentally make a selective disclosure to like an institutional investor, you can file AK, say, hey, here's something we should have told you.
Okay.
When an income-oriented investor wishes to compute the current yield of a specific investment, which one of these items would not be considered?
So I'm going to throw out B and C, obviously, for the denominator and numerator of them.
Exactly right. I always think what an investment pays me divided by what it costs me.
So it's got to be A, right? Because dividend paid would also be a form of yield.
Let's see, which would not be considered. I'm kind of, as your tutor, going to call this a bad miss, particularly when you told me how traumatized you were about net present value. If we have a bond, what it pays me is the interest divided by the current market price. If we have a stock, what it pays me is the dividend divided by the current market price. Those are different things. The interest means I got a bond. Dividends mean I have a stock. And so the answer here is net present value.
Yeah, that's what I said. I said,
oh, did you? Oh, my bad.
I said, yeah, dividend is simply a form of yield as a numerator.
My bad. My bad. I didn't hear you say that. I mean, I heard you say that, but I didn't hear what you were going to pull the trigger on as an answer. My bad. Final step in the approval process of the annual operating budget of the United States.
I mean, it's got to be C or A. Final step in the, and this is what always happens. I'll come down to 2, and I'm the worst 50-50 shot you've ever seen, Dean. I promise you that.
Here's what I would tell you about this, the test. I kind of was guffawing because you do need to be, you are going to be tested on fiscal policy and monetary policy. This question is about fiscal policy, government spending and taxation. That alone is a test question. And we should know that fiscal policy is controlled by the Congress and the president.
Mm-hmm.
So now what I'm guffawing about is the way Kaplan chose to ask you about Congress and the president. So it's not Janet Yellen that signs the budget of the United States. That would be President Biden, President Trump, or, who knows, President Trump again, or President Harris, right?
Yep.
I've been watching some of the DNC. It's kind of interesting, her discussion of fiscal policy. I'm like, whoa, I'm an independent. My brother's a little more of a Trumpster. And anyways, he's, man, they're spending money. I go, well, everybody spends money, Chris. Everybody wants to spend these little green pieces of paper. So,
The more I watch your videos, the more I learn about your brother.
There you
how
go.
funny this is. Yeah.
So anyways, the monetary policy, remember, would be controlled. That too would be testable. And that would be
Certainly.
controlled by the Federal Reserve Board.
Fed. Yep.
If your customer is pursuing an aggressive stock buying strategy, which of the following is most suitable for him? I kind of like this question too.
All right. Let me dive into this one. Do you?
When I say I like a question, it kind of means I think it's kind of something to be aware of as a test issue. When I say I don't like a question, it's kind of like I'm saying, I don't think you're going to see that.
So again, I answer very quickly in my head, and immediately I would go to C.
You're correct, right? Because we want volatility. Volatility is our right. So a beta is a measurement of the volatility as compared to the market. The market is always the S&P 500. So you're absolutely right. If we're aggressive, we're going for the high beta.
Yep.
A client asks her investment advisor rep, what footnotes to the financial statements are forward? The best reply would be,
I'm not confirming. I'm kind of thinking out loud here. A would be
please
true
do,
in my
please
mind.
do. That's part of our process. So I can know whether it's stinking thinking going on in your brain
Yep.
as a group, or where it's, it's right on track.
I would say A.
Hey, contain information. That's right. So for example, we're looking at the income statement. The income statement is not going to show us how we're doing inventory valuation. Are we doing LIFO or FIFO? The footnote would tell us, whether we're using LIFO or FIFO, right? Or revenue recognition, things like that. So you are correct. Which of the following is an example of business risk?
Increase expected. A.
Yeah, right on, right?
I'm trying to do a better job of taking your advice about reading all of the questions, but sometimes I get to A, and if I know it's right, my brain doesn't even want to read B, C, or D.
People, listen, don't be too gun shy, but yeah, you're right. There's a fine line. I mean, people don't like to hear this, but I had a person I was working with the other day, and he was upset because I told him that your answer, you're correct, is not wrong. It's just there was a better answer offered to you. And in the circumstance in which there's a better answer, you still get marked wrong because it asked you what best describes. Now, I know you want to hear that, but that means that what that means is the test writers are allowed to use wrong answers as right answers as distractors.
Mm-hmm.
Right? For example, I forget what it was. What was it? Oh, it was about a type of underwriting. And I said, well, yeah, but you could have been more specific with your answer. And so that's why you're getting marked wrong. So I agree with you. Check the answer set. I had a guy, and I'm not opposed to this. You're doing well. So this is not to you. I log on and I said, listen, I don't want you to, the time for tough love. You're not in a position yet to be even doing tutoring. I mean, you don't even know what you're being asked, and you don't even know what the answer is being offered to you. You haven't laid enough base knowledge to do that. Now, if you want to change this to a tutoring session, you literally want me to walk you through the entire 65. I'm willing to do it, but it's going to be a very expensive proposition. So what I would recommend is we reschedule. You get to work on executing a study plan, and you and I can visit, later. And so, I wasn't sure how he was going to respond, and we rescheduled. And then when I hit the Zoom link, he said, Dean, I think I'm halfway there now. I said, you are? What do you mean? He goes, I actually know what I'm being asked. I still don't know what answers are being offered to me. I know what the questions are. And so the way I always paraphrase that is RTFQ, read the full question.
Yeah.
RTFA, read the full answer set, right?
Yeah.
All the following ratios are a measure of liquidity, except I kind of like this one.
So the acid test, so A and D are identical. From my
Yeah,
understanding, the
perfect,
current
yeah,
ratio definitely is the only difference is inventory there. So I mean, just process of elimination, I'd say boy.
Perfect. So, we have liquidity. B is about solvency, right? Not liquidity. So if I asked you, how did you capitalize your home? That isn't a question about your liquidity. It's the question about the solvency in terms of your house. If you say, Dean, I paid cash for my house. Wow, no mortgage. I think it's going to be hard for you to, go under. You say, Dean, I had no down payment in the house. It's completely a function of the mortgage. I go, oh my God. So it's debt divided by equity. So that's more about how we decide to capitalize the corporation. Now, in a corporation, there's no such thing as a corporation that doesn't have some equity, some common stock. Now, counterintuitive, the higher that debt to equity ratio is, the
The more problems they have. Yeah.
That's right. And the more interest rate sensitive they're going to be because they have to refinance. Right. And that's counterintuitive. We say a company trades on equity. That's counterintuitive. But if I'm telling you a company is trading on equity, I'm saying they have a small amount of equity on their balance sheet, a large amount of debt. And that would be typical of a utility company.
Fair enough. Yep.
If the current risk-free rate of return is 4 and the expected market return is 10. So what I immediately do is I say, okay, I could have got of the 10, 4% without doing anything, without hazarding my capital. So I tend to like when I get a risk-free number is just immediately deduct it from whatever my return is, right?
Yeah.
What will we expect from a security that has a beta of 0.9?
So these are these little calculations that I need to do better at. So immediately 10, I know the formula is like something like 10 minus 6 multiplied by, so,
Okay, well, let's just slow down.
okay.
There's a lot of ways to go. So 4% is what we get for not housing our capital, right? So 4% plus, now we're going to say, okay, of the 10, I like what you did. You're on the right track. We could have got 4. So that's 6. And so now we're going to take 4 plus 6. Before we do that, though, we're going to take the 6 and times it by the beta.
So
right? So
4.5. Yep.
there we go. And then now we're back in business. So when we do that, now we got 4%. 6 times 0.9 is 5.4. We get 4% plus 5.4, and we get 9.4. So how did we do that? Again, I think you could, particularly as your tutor, based on your performance thus far, you could, I think, blow these questions off because you're doing pretty good already. And when most people struggle sometimes, what they struggle with is the order of operations. And what I mean the order of operations is how are we going to do things? And so I tend to like to just immediately say, well, I could have got the 4% without doing anything. So you were on the right track. You said, well, that's 6%. And then we're going to times the 6% by the beta. Boom. And I'm just going to put that in again. I'm going to do that. And boom. And so now I got 4%. That's still there. And then I do my 6% times 0.9.
That's why 5.4. Okay. Okay.
Go.
Okay.
And now I got
okay. Yeah.
5.4. And now I'm in business, right?
9.4. Okay. That was, geez. Yeah. That's so simple. So simple.
Well, the math, you know, the math, I consider it to be a little bit of a siren song. What I mean by that is I think people really on 63 start going down a bunch of math rabbit holes. This is the first, I think we're 15 deep, and the first time we had to get out a calculator. Right.
Yeah.
And even that, I wouldn't be surprised if you didn't see this. But you know, remember, this is the underpinnings a little bit of modern portfolio theory. So in other words, we're not going to be happy if we get 8. I'm going to say based on the risk we took, we would expect 9.4. Right. Now, if we
Yes.
got more than 9.4, we'd be happy. Right. Let's say
Correct.
we got 13%. The answer is 9.4, but we got 13. What would we call the difference between the 9.4 and the 13? That would be called alpha.
Alpha. Yep.
Right. That's the XRES returns over beta.
Correct. Yep.
Yeah. So yeah, there we go. Boom. Let's see how long we go before we run into another, math problem. Now, math problems, I had a guy, same as you. I opened up the Zoom link, and it was a tutoring session for 65. And he said, Dean, I'm not paying you $225 an hour to do math with me. I'm a math geek. You give me any 2 numbers, I can solve for the third. I don't need to memorize any formulas. So we're not going to be doing that with our hour. I said, no, that's fine with me. Anyways, good news. He passed, but he said, Dean, I wish I would have, made some flashcards and some recognition, because the math was more recognition than practical application. He said, and, I struggled a little bit. I mean, I figured it out because I could make up some numbers, do the math, and then figure out what the answer was. But I wish I would have just made a flashcard about it. I said, well, there you go. Right. So there's
The
a lot of stuff.
practicality of it. Yeah.
Federally covered investment advisor has decided it's necessary to increase its fee schedule and charge commissions on securities trades. However, they're going to leave the fee structure in place for existing customers. This information must be disclosed.
So I don't think it would be A.
Properly administered. Yeah, it's not to the administrator.
Yeah. So it's either B or C. So again, one is going to be a better answer.
I like it.
This. Yep. I would say B, just kind of as a blanket.
Yeah, I thought you were going to get it because I thought you sound like you were on the right track. What's a better answer?
Yep.
Yeah, it's tighter answers are a little better, right? I don't have to tell all of my customers because it's not relevant to all my customers, right? I only have to tell the customers that it's going to affect, right? So the answer is C, not right. So if you go to change your fees, but you're not going to mess with your existing customers, you don't have to call and say, hey, Dean, I'm raising my fees for new customers. And I go, well, okay, but, what's that got to do with me? Yeah. And you say, well, I just want you to know I'm a good guy and I'm leaving you alone. I go, well, you must have too much free time on your hands. Right?
Yep.
Not bad though. You're on track. I'm
because I think, when I hand out a brochure, it's not like there's one specific brochure that I give one set of client versus the other.
Well,
So
I gotta tell you too, that is the challenge, isn't it? I mean, I think it's a bigger challenge when you're not a baby broker, you're not a tabula rasa, you've actually been doing business, and the real world versus the 65 fantasy land, and all those prudential rules. And I do think that baby brokers sometimes have an advantage in that regard, that their mind isn't clouded with it, so they'll believe anything we tell them, right? So
that's true. Yeah. Clean
okay,
slate.
stock trade on NASDAQ has a beta of 1.2. One could expect the stock's volatility to the S&P would be.
Bravo.
Yeah, 20% more volatile, right on. Right. Oh, by the way, both directions, right? Both directions.
Correct. Yep.
From the standpoint of diversification, which of the following would be the most conservative? These judgment questions, I think, are always tough because, as I said, we want to get all the recognition we're entitled to. And I struggle on some of these judgment questions as well because I'm a little more aggressive than, the test would like me to be.
So I'm going to throw A and C out immediately.
Right on. You're absolutely correct.
Yep. The income fund, again, this is where I'm a little bit confused. The income fund, at least Well, no, it wouldn't be a growth and income fund. So I would say B, probably because it doesn't contain any equity exposure because it's
Whoa,
not a
whoa,
growth and
whoa,
income.
whoa. Okay, so you went a little off the deep end just there at the end. A balanced fund has both stocks and bonds. It has a variety of investment vehicles. An income fund is typically a stock fund with stocks that pay dividends. It's not a bond fund. So you were absolutely correct to toss out A and C. And then you had left B and D. And the balanced fund is going to be a better answer because it has a
Okay.
balance between stocks and bonds. Right? What'd you
Yep.
say? Income fund? We're trying to get your real score. Did you
Yeah,
say?
yeah, I agree. Yeah, I did say income. Yep.
Yeah. A customer who follows a strict dollar cost averaging program to acquire shares in a diversified common stock mutual fund should achieve, this is very testable, dollar cost averaging.
Alpha.
Right on. What makes it work? Fixed dollars invested regularly. What's
a
the end
volatile market.
result? Yeah, you're doing exactly what you should be doing, buying less shares when they're high, more shares when they're low. Doesn't guarantee a profit. Washington Adams. Yeah, just shrink that. I try and make it bigger for it's easier for us to see. Sometimes doesn't fit on the screen. Washington Adams and Jefferson is an investment advisor whose principal's only office is in Alexandria, Virginia. Their sole business is advising institutional investors. Rutherford Buchanan is employed by the firm in the main office and has the responsibility of servicing the bank and insurance company clients. Which of the following statements is true regarding licensing requirements? Are you still there?
Yeah, I am. I'm reading I'm reading.
No worries, no worries. Take your time. I just want to make sure I didn't lose you. I'm in my off-grid location and there's monsoon on the way. And so my Starlink is pretty good, but every now and again, Mother Nature wins.
Yeah.
Oh, you're going to Florida. You're going to have more problems with Mother Nature than I'm going to have.
I'm already here. Yeah,
Oh.
exactly.
And where are you coming
business.
from? New Jersey? Were you in New York or New
New
Jersey?
York, central
Wow.
New York. Yep. Sole business and advising institutional investors. Ruth became employed by the firm. The main office has the responsibility of servicing the bank and insurance company clients. Which of the following statement is correct regarding licensing requirement? Man, these are tough for me.
Yeah.
I would say C.
There you go. Good job. What you had to decide is
even though they're exempt transactions
that's right.
associated, you still got to register. Yep.
Exactly right. They were trying to throw you that change up. I call it the Jedi mind trick. You didn't fall for it. They were trying to cloud your mind with stuff that has nothing to do with this. If this is a federally covered advisor and that's what you decide, then it becomes a name and shoot point click. He only registers in where he has a place of business. And he said he has a place of business in Alexandria. And so you nailed it. Your client's in a 25% federal income tax bracket, and a state where his earnings place him in a 6% bracket for state income tax purposes. If he were to purchase a 4% bond issued by a political subdivision of another state, his total tax equivalent yield would be, boy, this is Kaplan going way overboard, but
Yep.
um,
Well, the state exemption, I believe, he's going to be subject to the state. And I'm thinking out loud.
that's
Yeah,
exactly
he's going to be
right.
because he's not a resident. Yep.
That's exactly right. Reciprocity doesn't apply state to state. So his state's going to say, hey, that's what you get for not investing locally in your own state there, buddy.
Yeah. So I mean, in that case, I would I think it would be, 6 times, 0.69, or excuse me,
Yeah. well, yeah, so what we're trying to figure out is the tax equivalent yield. And when we do that,
Oh, got it. Okay.
we're gonna divide. So you're on the right
Yep.
track. We're gonna take the 6% and we're gonna divide 1 minus his tax bracket.
Yeah. So it's gonna be, I'm just gonna use my calculator real
Yeah,
quick
yeah,
here.
I'll do it with you. Just 6 divide by 1 minus his tax bracket. What I basically think of taxes, I kind of think of it's, what the government's confiscating from me, right? And so here, the government isn't going to be taxing and taking that from me. So I'm going to be left with 75. I'm going to divide that. So I'm going to take 6 divide by 0.75 or 4, excuse me. 4 divide by 0.75. I get 5.33333. And so now I got to decide, am I getting slightly less or slightly more?
Well, he's getting slightly more. Wait a second. Let me think about this whole question here. Yeah, he's getting slightly more. So in his total side would be slightly less than 5. Wait, I'm a little bit confused here. So
Okay,
hold on.
so we got
Four,
the number.
4. Okay, points.
So you get to keep. So if you're going to tell me slightly more, you're saying he's not paying the state income tax. And
Oh, slightly less. So yeah, I forgot about the state part of it. So yeah, we still got to factor that piece in per my original
Yeah.
statement. So slightly less. Yep, 5.33.
I don't think by the way, is that concept testable? It certainly is. Do I think they're going to have a guy who lives in state A and buys states B munis? Absolutely not. Do I think you should know that munis are federally tax exempt no matter where you live and what kind of bond you buy? Yes. Do you need to know that in terms of suitability, you need to buy a bond from a state or a territory so your client can maximize that tax-free return? Yes. Do I think it's going to be asked in this convoluted matter? I do not. Harrison is a certified financial planner, CFP, with an office in the state and a telephone directory listing category financial planners. Harrison has, for fees, written more than 100 financial plans for various individual clients. However, only 20% of the plan's content entails advice regarding securities and investments. Which of the following statements best describes Harrison's status as an investment advisor under the Uniform Securities Act?
B as in Bravo.
Yeah, Harris is required. You nailed it, right?
Yeah.
Financial planners, every once in a while, they for some reason they don't think they need to be registered, and they've been told, yes, you're giving investment advice, you're in the business of giving investment advice, and you want compensation, so you is what.
They just don't have to pass this god awful test.
That's true. That is true. That is true. The road you didn't take, right? Maybe early in my career, I thought about doing the CFP, and my road went down a different path. But yeah. If ABC fund pays regular dividends, offers a high degree of safety of principal, and appeals to especially an investor seeking tax advantages. I like this question.
So what's thrown me off again, just thinking out loud, is a municipal bond fund does not pay dividends, right? It would pay interest. Well, technically they would be dividends, but interest comes into the fund, but dividend comes out.
That's
So
right. That's what this is testing on. That's why this
okay, got it. So yeah, I would go with that right there.
That's exactly what they're testing on. They're exactly what they're testing on. Do you understand that the interest income coming into the fund is tax-free, gets distributed to you as a dividend? So that dividend from the tax-free fund represents the flow through of the tax-free income. So you were on the right track. You nailed it. An employer offers its employees the opportunity to use tax deductible funds to pay for health costs as long as they roll in a high deductible health plan. This would be A description of, this is very much a test question.
I have one HSA.
Yeah, there you go. Well, see, well, there's the advantage. We talked about the disadvantage of being experienced, and now you get a point for that. Absolutely. I'm gonna write that one down because that's pretty good. When I find a good one, I like to share it with other test takers. It's 152 4891. An exchange specialist is.
Man, there's a lot of them that I could choose, but again, reading through, I would say D is in dog.
Excellent. That is the correct answer. You know,
Okay.
when companies are going public, they either decide to have their market center be New York or NASDAQ. Those are the two major market centers. And the New York Stock Exchange says to those companies, if you come to the New York Stock Exchange, we're going to have this guy known as a specialist, a designated market maker, who's going to be charged with maintaining a fair and orderly market. There's going to be an auction, a double auction for your company's securities. Now, NASDAQ comes and says, well, gee, you wouldn't want to have one guy, would you? Don't you want to have people competing? If you come to NASDAQ, the National Securities Dealers Associated Automated Quotation System, various market makers would post bids and asks, and they would be willing to buy or sell from their inventory. And so you're correct, it's D. A floor broker is the person on New York Morgan Stanley, for example, who executes orders for clients of member firms. I do think it's interesting that whenever a company does go public, the investment banking firm, whether it be Goldman Sachs or Morgan Stanley, say, you know, you should go to NASDAQ and we'll be one of your market makers. But yet none of their own securities trade on NASDAQ. All their own securities trade on New York. And I think it's because they don't want people that have inventory in their securities. So,
Yeah, makes naturally.
do as we say, not as we do.
Mm-hmm.
When it comes to borrowing and lending money, NASA's model rules prohibit activity that would compromise the objectivity of securities professionals. Which of the following is not? Which of the following are not prohibited practice? So two of these things are okay, and two of
Yeah.
them.
So two is out. An advisor borrowing money from an affiliated broker dealer. Mm. So I think one is correct. I think three is correct. So I would say B is in Bravo.
We got you.
Okay.
The two does look bad, but it's not me borrowing from the branch manager. It's a bona fide loan, right? I got it from the bank. I didn't get it from the branch manager. So as long as it's a bona fide loan, I went through the normal process and I bet that bank would go. That's fine. What two would be bad is if it was the branch manager personally who lent me the money. Right. So an agent taking out a car loan from a bank. That's the key point. That is a bona fide lending transaction.
No doubt. I missed bank. Yep. Didn't even see that. I'm looking on my phone. Not that that makes a difference, but it's a little smaller and
No, no
okay.
worries.
Yeah, that makes complete sense. So what is the overall answer for
One,
that?
2, and 3.
Okay.
So you just didn't include 2, but again, that's easy to do because the first, when you see agent alone, your brain should do exactly what you're doing.
Mhm.
Oh, that's a problem. But then it says from a bank, and then it just says the branch manager. So
Yeah.
we call it the bona fide is Latin for good faith, and that's a bona fide lending. So not a bad miss. You
No.
were correct about 1 and 3. You
Yeah.
just
Margin, and then obviously
that's
institutions can
exactly
borrow from one another. Yep.
account. We do that every day. That's exactly right. And affiliated broker dealer, that's fine too.
Yep.
A company's dividend increases by 5%, but its market price remains the same. The current yield of the stock will.
Give me 10 seconds because I'm just going to do a real
I
dumb
love that. I always like
calculation.
making up numbers. I like that. Make up a number and say, okay,
So increase, whatever that is.
I like it.
Okay.
Sometimes when they don't give you numbers or ask you to do math, I do it anyways because sometimes
I
the math
do.
will illustrate what the right answer is, right?
It is, and it's like 5 divided by 100 or 6 divided by 100. That's as
Yeah.
easy as I'm trying to make that.
Yeah, well, if you're gonna, well, I just gonna say the same thing. If you're gonna make up one, make up an easy one. Don't make up, something that requires a PhD in modern portfolio theory to answer. All right, which of the following is a multi-option strategy?
A is an alpha.
Yeah, a straddle. There's a couple areas on 65 where I think it's kind of challenging. I mean, I think the 65 can be I think one of the most challenging exams offered by Fern and Nass, particularly on the background. And what's so hard is there's these little areas or pockets of the 65 where it's hard to make an editorial decision. I mean, even myself, I got my 65 playlist, and some days I think, okay, I should have all those options in there, videos, and other days I go, no, so it's kind of hard to decide how much. You're right, by the way, and I'm very impressed because if you in situations where somebody did miss this, I would probably say, don't worry about it. You got it right, which is wonderful. Because I would sometimes say give yourself permission to, I guess, be assigned to the universe and you make up that elsewhere where there's a target rich environment. But excellent. Maybe 5, 6 derivative questions. This would include futures as well as options. A client with 25 years into till retirement, 25 years until retirement should invest.
So he's call it 40 years old.
Yeah, the trick is your point exactly right. It's not only they got to get to retirement, then we got to keep them in retirement.
Should primarily invest in. Does that mean have the majority in? I guess
Yep,
that
that's
question
what that
slightly
means.
could. Okay. So the complement rule or whatever that's called. So D, common
Yeah,
stocks.
excellent. I
Yeah.
think you attacked that perfectly. I think there's a couple ways to do it. The complement rule, you could have also said, well, bond seems like, that would be, not smart. Private placements, that's just out completely. Preferred stock, fixed income, no. A surrender charges may cause a reduction to all of the following except.
So it would definitely cause a reduction on A. The liquidation value of it, which is also B, the cash value of a variable annuity life insurance policy or a variable life insurance policy. I'm going to come back to that one, the death benefit. I would say it would not cause a reduction on D.
Excellent. On October 1987, the SEC promulgated Release IA 1092, which had the effect of broadening the definition of an investment advisor. As a result of the release, which of the following would be included in the definition?
So I'm going to throw 4 out and 1 out, I think.
Yep,
Hold on.
right out.
Yep.
There you
So
go.
there you go. So I would leave 2 and 3.
Excellent. Issuance of which of the following would most likely increase the leverage of a company's capital structure?
Issue of which of the following would most likely increase the leverage in a company's capital structure? So I got a feeling I'll get this one wrong. I hate to be negative right away, but again, I think the question is asking me how am I going to increase more of the assets relative to the debt? And it could be the other way around.
Yeah,
And
that's
again,
right. Grammar is always important. Yeah. So I like that you're articulating how you're reading the question.
yeah, the leverage. For I always think leverage, I immediately go debt, but I
Yeah,
don't.
I
I'm
think
not.
I always think that's the way to go. Think of your personal situation. If you say, "Hey, Dean, I'm increasing the leverage in my life because I'm going to Florida, and um, you know, I'm going to leverage myself up because I want to get a penthouse apartment that overlooks the water." So leverage means you're absolutely right. It means you're adding more debt to your life.
Well, so which of the following would most likely increase the leverage of a
Yeah.
company? So B, I would say.
Yeah, and the other way you could have got this, which I like, is called the Sesame Street trick. One of these things is not like the other. A,
Ah, that's
B,
right.
and D are all
Yeah,
equity securities.
three forks and a spoon.
There you go. That's exactly right. Right. So that would be the other way I would have tacked this. Sometimes, someday, I'm going to write an entire exam that has no questions. It just has answer sets. And the exercise would for people to try and figure out what the answer is without the question. Right. So, sometimes I play this game with people where I'll cover up the answer set and say, well, let's just project what we think the answer is, or let's cover up the questions, play that game. And for example, I say, listen, if I have any answer set and one of my choices is like yield a call, I'm taking it, and then I'm going to go ahead and read the question and see what it's about.
So on this question though, right? I guess, and this is where I got to stop my brain from trailing off because I start thinking, okay, well, why would I want to issue bonds when I can issue stock? Why would I want to put
Well,
myself
you are on the
more?
right track. You're on the back
Okay.
side, right? Because if you issue
Okay.
common stock, that means we're not going to have as much risk. You can't go bankrupt if you don't owe anybody any money, right? So,
Yeah. So why would they ask how? Why? So the question really again is why are they even asking about increasing the risk or the debt? Why would I want to do that as a company? I mean,
oh
so
well,
I
remember
always
because
think. Go ahead.
I was just going to say because leverage is neither good nor bad. I mean, when I was a practitioner, I had Mormon clients, and they would say, "Dean, the borrower is over the servant of the lender." Proverbs 11:13, not a good candidate for a margin account. But leverage isn't good or evil, but leverage increases returns. So if I had a stock and they had a lot of bonds on the balance sheet and they start making money, they're going to make money quicker, right? And if we're doing fundamental analysis, one of the things I'd be looking at is the industry, the companies in the industry, and then I might pick the one that's most leveraged because they would be able to make money quick. Same supercharged speed, your point, you're going to make money with is the same supercharged speed you're going to lose money. It does add risk, but hopefully it also has reward. Oracle is a good example. Larry Ellison used to own 20% of Oracle. Now he owns 44% of Oracle using none of his own money. He's had Oracle borrow billions and billions of dollars to buy, make acquisitions, as well as to buy back their own stock. Their credit quality is not investment grade. Does Larry give a damn about the credit quality of Oracle?
Clearly not. Yeah.
Yeah. And he's saying, listen, what do I care about the credit quality? By the way, when he makes acquisitions, it makes sense he's not going to issue stock. That would be a smarter way to do it from a risk perspective to pay with stock, but then he'd get diluted, right?
Correct. Just
So
thinking
he
that.
ain't going to
Okay.
do that.
Yeah.
So now if you buy that stock, then you're a point, right? And then you need to kind of know you're going along for that ride, right?
Yep.
And, maybe you're comfortable with that. Maybe you're not. Now, he's
Nice.
competing again. We are talking about companies. He's competing in the cloud and the business he's in against Microsoft and Alphabet, and they certainly have more resources than Oracle. Hey, I think he's doing okay. I don't own the Oracle stock, but listen, I think it's funny. David Ellison, his son, is trying to buy CBS Paramount. And they always mention that David Ellison's dad is Larry Ellison. And I think the reason they mention that is because daddy can help finance.
Makes
You know?
sense.
Yeah. So I think it sounds like you're just a little prejudicial on that. But here's
I
another
was.
example. I'm with you, right? If I was going to do things, I'm just, a guy doing my thing. I think of myself as a semi kind of retired stockbroker. And so I have an LLC, but I do collaborate with some of the bigger test prep vendors. And sometimes they say, well, Dean, we're a little concerned that you might, instead of becoming a collaborator with us, that you might become a competitor. I said, well, the first time you make a check payable to Guru Exam Prep Inc. instead of Guru Exam Prep LLC, you should be concerned, because that means I've
Nice.
changed my business structure from an LLC float vehicle to a corporation that can issue common stock, that can issue bonds. My buddy Brian, the test geek, right? And I said,
Yeah.
Brian, hey, you want to sell Test Geek? He said, what are you going to give me? I said, I'm going to give you some stock in Guru Exam Prep Inc. I think Brian, he'd probably say, are you nuts?
Yeah.
Right. So
Nice. Thank you for that explanation. That cleared a lot up.
a Jones family has scheduled an initial visit with their financial planner, a financial planner. Mr. Jones has an annual salary of 70 and is his first attempt at financial planning. Which of the following should be the first step taken by a financial planner? I don't know if it's true, but I'm projecting I probably should do some data gathering or a client interview or something like that. Is kind of what I'm looking for.
Yeah, that's immediately where I went. I was kind of looking for data gathering stuff. So I'm gonna. I mean, B and D could also be right, but I think the first thing that I would do is kind of go B as in Bravo.
Yeah, yeah, I'm kind of with you. Which of the following first step taken by the financial planner? Set goals and dates for reaching them. D is the better answer. The
Wow.
first things we do is establish the emergency fund and insurance. I'm kind of with you on this. If I could have easily missed this too, who knows? Maybe I'll miss it. But set goals and dates for reaching them. I think first what we're going to do is see where you're at presently. So I'm going to say, Chris, what I'd like to do is see where you're at. Go over your current assets, your long-term assets, your current liabilities, your long-term liabilities. I'd like to establish your net worth. Take a picture in time where we're at right now, then go over your income statement. And then from that, the next thing I would do is data gathering. And then I'd say, okay, listen, I'm just looking here at your balance sheet and it says that you have $10 in cash. I mean, what's up with that? I mean, I think we should establish, most financial planners would say 3 to 6 months, just depends on the client. So that if something happens, we're not have to make, I feel bad. I see these stats all the time, just is crazy. I mean, about people who, miss a paycheck and their whole life goes upside down. I'm like, wow. I mean, I'm blessed not to be in that situation, but my brother, his nonprofit, you'll learn more about him, helps people who are formerly homeless get back on their feet. And part of that is getting them some transportation, giving a living. And he has one guy who was helping and he got pulled over. And I thought the cop was very nice because the cop, there was a miss up in the ID. He wasn't who the cop thought he was, but the cop could have towed his car and that would have been like $1,500. I mean, he wouldn't have it. Now he doesn't have transportation. He loses his job. I mean, just one of those cascading things, right? So,
yeah,
you lose your job, you have some, a couple months to figure it out, right?
yeah, that's a bad mess.
One of your clients approach you about setting up a trust. If your client assumes the role of grantor, which additional roles may be taken? What additional roles may be taken?
One of your clients approached you about setting up a trust. What additional roles may be taken? I mean, I would go D as in dog.
No, you can be the trustee and the beneficiary. You can.
Okay.
Now as the grantor, no other roles, that would be if you set up a revocable trust, right? So it depends on the trust, but without any discussion of the trust, it's actually A is the better answer, right?
Okay.
So we're going to mark you wrong. You're still doing great. So I wouldn't worry about it. An investor wishing to add some diversification to his portfolio wants to purchase 200 shares of an American Depository Receipt for Japanese electronic manufacturers, ADRs are very testable. I can't imagine any draw in which you don't get a question about an American depository receipt. The ADR is listed on the New York. Which of the following risks should be of most concern to this investor?
Investor wishing to add some diversification as portfolio wants to purchase 200 shares of an ADR for a Japanese electronics manufacturer. I would say C.
Yeah, you certainly need to know currency risk. You nailed it. And that currency risk is definitely on the test. Definitely on the test. Why would you consider adding an ADR or a foreign equity in the foreign market? Why would you add foreign equity securities exposure to a client's portfolio?
You're asking me why I would do that?
Yep.
For kind of the correlation aspect and just
Perfect.
diversification.
There
Yeah.
you go. Perfect. That concept, remember, is called negative correlation. This idea that by adding investments that have different correlation, negative correlation, we increase diversification, and therefore we get a better risk-adjusted return. Excellent. Which of the following is true regarding Section 529 plans?
One and three.
It's actually 1 and 4, right? They're determined that the state would decide. It's a municipal security. 529s are municipal securities. So I don't worry about the 3 or the 4. What I do want you to remember is that 529s are municipal securities. So if the MSRB says it's a municipal security, well, by God, it's a municipal security. And then that means the federal government isn't involved in that. It would be the state.
So why? So I got to ask about this one, Dean. So why do when I read and the textbooks tell me that, they can have a married couple, for instance, or even an individual can do a lump sum contribution of 5 times?
Yeah, is that crazy?
Yeah. So that's immediately why I said, well, it's got to be federal, right? I mean, because
the gift tax is federal, but that 5, that's a good point. The 5 front load thing, maybe there's I think that would be an internal code thing. But there we go. Section 529, I think, would be part of the IRS code that says you can do this, but these are governed by the states. So, but I'm with you. President Obama, when he was president, I had the honor of tutoring his financial professional. Anyways, President Obama was talking about 529. You're thinking about the 5 years when he did it was 15 grand. He said, I put in 75 grand for each of my daughters. That's 150. Michelle did the same thing. That's another 150. We were able to take $300,000 out of our estate without going to gift tax. I know, well, that's good. He's chatting up these 529s. And then he said, maybe we should means test these things because, to be honest with you, Michelle and I don't really need any help taking care of the girls' college education. I will say it ain't so. Right? So, if my progressive friends take over, watch out. Right. But it's a good question. It's just, it's a municipal security.
And I get that. So let me ask you, what is the maximum contribution to a
5 years?
529 plan?
Well, there isn't a mandated maximum. Remember, the gift tax doesn't mean you can't give somebody more than that. It just means you're gonna
you got to fill out the form there.
Yeah.
The
way I think of the gift tax is the estate tax in advance, right? I say
Got
the
it.
easiest way to avoid the estate tax is to dissipate your estate before you check out. To prevent you from doing that, the IRS says, listen, you can only do X, right? So
Okay. Yep. So D was the correct answer there.
yeah, it was.
Okay.
Which of the following best describes? Did you get a Kaplan Q Bank or not?
No, I mean, these are fairly new to me for the most part. I've done a few of them.
That's a good thing. But I was going to say, with my Guru 15 discount code, maybe it's going to cost you, I want to say about $50. And you are videotaping this. And if you did buy the Q Bank, you could actually look up question like 152222447, and it would show you the rationale. I
Nice.
potentially are giving you my spin on it, so it wouldn't match up with what I'm telling you in the video, but hopefully it would be close.
Okay.
Which of the following best describes, oh my goodness, the balance sheet equation, the classical balance sheet formula? Very testable.
So I know 3 is correct.
You are correct.
And I know 1 is correct also, but I know that I don't know if they're asking for a personal balance sheet or a corporate, because I know
Oh,
it
it
can
doesn't
make a
matter. They're pretty
difference.
the same, right? I mean,
Oh, okay.
right? I mean,
Well,
with
well, I know 1 is true. I mean, I know 1 is
yeah,
true and I know 3 is true. So
yeah, even on a
y-
whether, and I always tell people, if you're struggling on the corporate version, use your own personal version, right? It's your
yeah,
assets minus your liabilities equals your net worth. That's the same for you as it would be for a corporation.
yep,
Your personal balance sheet, your liabilities, and your net worth, your equity should equal the other side, right? Which
yep.
is assets, right? So you nailed it. I struggle with this one, by the way, because the other way when they refer to it as 3, I struggle a little bit because I'm so used to this version.
Me too.
So when I
Me
see it
too.
expressed the other way, I go, "Oh man, I know this."
Oh, that took me a full hour for that to actually get through my thick skull of what they were
Yeah,
doing there. I was
yeah,
putting down just like 3 plus 5 equals 8 and then doing it backwards.
yeah,
It was,
yeah, yeah. I'm with you. So
yeah.
you can get locked into a phraseology. So just even on the real test, make sure you go, God, I know this. So am I missing up on the phraseology or something? If 2 agents of a broker dealer agree to work together as partners to solicit business, and they agree to split commissions, I can't tell you how many Prudential people I've worked with who work in teams, right? So you want to work as a team. What are the rules about that?
Well, I was looking for more of they got to be under the same control of the,
That's
mother
right. You're
company or
up as the
whatever.
common
But
control is definitely there unless they have
yeah,
permission from the state administrator. So
uh, yeah. I mean, so it's either C or D, but so C, yeah, it's got to be D.
yeah, and then remember the other thing is they sometimes trick you. Do you have to tell your clients what your split is on the team? You do not.
No.
Right? I don't have to say, well, Chris is getting 90, I get 10, whatever.
Yeah, you're a good partner, Dean.
Yeah, I was just gonna say, I always tell the junior people that, they can hook up with a team and, take a lower version of that because of the learning curve so atrocious. If you can hook your wagon to somebody's else, might want to do it, might want to consider it. I always tell the new people, baby broker types, like, listen, in the beginning of your career, if you can, take the learning experience over the money because the money will take care of itself. And if you get stuck in the wrong spot, that's going to be, worse than getting good pay. If an investor is looking for an open-end investment company with an objective of providing current income to its shareholder, she would most likely choose,
D.
yeah,
Some of these straightforward ones scare me just because
yeah,
I'm
well,
like,
yeah,
all
yeah,
right,
well, don't be
yeah,
scared. Yeah, don't be
yeah,
scared. But hedge funds and venture capital funds are not mutual funds.
yes, yeah. I'm like, where am I missing it here?
Yeah, yeah, yeah. I'm with you. We go a buck fee when you get so uneasy when you can't squeeze the trigger anymore, right?
Yeah.
Among the characteristics of a leveraged ETF, you will get questions on ETFs and how they're different than traditional open-end mutual funds. And you will get questions on inverse ETFs, and you will get questions on ETN. So, should be expecting something like this.
So I'm down to B and D here.
Correct?
Um, so I would say B is in boy because ETN might be the aspect of D.
There you go. You got it correct. And it is very testable. No, you cannot buy open-end mutual funds on margin. You can buy ETFs, leveraged or not, on margin. Right? Despite superior stock price increases in the computer industry in a given year, the stock of ABC Computer loses 47%. Following the third losing quarter, the chief financial officer is fired. This is an example of.
Despite superior stock prices increases in the computer. I mean A.
Right on.
Yeah. I was looking for something in there that might be a regulatory risk in the question, but I didn't see it.
Right on. That's exactly right. Well, that's what you do, right? You shop your answer set. Which of the following is most likely to be regarded as defensive stock? This is very much a test question.
So it'd be down to B or C to me,
That's
and I'd say C.
Yeah, a defensive stock is a corporation that delivers products and services resilient to the business cycle. You got to eat regardless of the business cycle. Now, the answer here is a food company, but it could have been a utility they like on the test.
Or pharmaceutical, I think, is
Yes,
the other
exactly.
one.
Nobody wants. I'm a doctor and you're sick, and I'm telling you, listen, I got a drug that works. It's really expensive. I got a generic version. It kind of works. If it doesn't
Yeah,
work, you're gonna die. Which one do you want? Yeah, you're right.
and they put tobacco companies in there too. I
But
don't know
you
how
bet,
or
you
why,
bet,
but
you bet. And in aerospace, stocks are cyclical, right? You can delay purchasing a new airplane. You know, you don't have to buy a new
yeah.
airplane. A broker dealer holds fully paid for securities for safekeeping. Under NASA's statement of policy on unethical and dishonest business practices of broker dealers and agents, the broker dealer.
Broker dealer is fully paid for customer securities for safekeeping. So I'm gonna throw B as in boy out. I'm gonna throw mainland to them delivery on short. So I'm gonna throw C out. Would be I mean, A just seems logical.
Yeah, segregation is good and commingling is bad.
Yeah.
Right? Segregation means I know whose securities are who. Commingling means I say your securities, my securities. What does it matter? Which of the following securities trade on regulated stock exchanges with the price being determined by supply and demand? I like this one.
One and two.
Right on. Right on. Very testable.
Mutual funds are redeemed, and I'm really not sure what a face amount certificate company is. Is
Well,
that a
they're illegal
CD?
in most states. No, it's
Oh,
a form of a mutual fund called a contractual plan that nobody sells anymore, where it's
okay.
front loaded. Like, you know, you give me 1,000 a month and it takes you 12 months to buy any fund shares.
Okay.
When making recommendations to an advisory client, which of the following would carry the most weight?
One and three.
Excellent. At the end of Maria's tax year, the unused fund in her HSA, well, you've now set high expectations that you are going to perform well on these questions.
It's alpha.
Alpha, you are correct.
I think FSA is the one that you lose it if you or whatever it is.
That's
but-
right. That's right.
Okay.
And that leads to the bonanza of people going to do spend it before they lose it, right? The child of one of your clients is headed off for a year of graduate study at the University of Oxford in England. The Section 529 plan used to fund the child's undergraduate study still has about 20,000 in the account. Because Oxford is on the U.S. Department of Education's list of approved institutions, qualified expenses would include which of the following?
So B and D are out.
Right on.
So I would just say logically, C.
Yeah, right on. Sharon is an agent for Highwater Securities, a broker dealer registered in all 50 states. Sharon receives an unsolicited order from a bank located in state X, a state in which she has no place of business. Under the Uniform Securities Act,
Okay, I gotta dive into this one a little bit. So I know broker dealer doesn't have to have, if it doesn't have an office in the state and only deals with institutional buyers, then they don't have to register in that state. But again, this is asking about an agent.
I love it. That's
Um,
really important that you know, I call it the cast of characters, that you're real clear about the cast of characters on your 65. There's broker dealers, there's investment advisors, there's, clients. And I love this. It says no place of business, and you should just be able to say, okay, well, that doesn't have anything to do with this question because it already tells me the broker dealer is registered in all 50 states. And so now it's about Sharon. Your point, this isn't about the broker dealer, it's about Sharon. And she's not an investment advisor rep, she's an agent.
Yeah, so I got a feeling I'll get this one wrong. And again, I don't know if the solicited, unsolicited thing is throwing me off a little bit, but I would say A, if I
You
was
are
a guessing
correct. There's
man.
no
Okay,
situation in which
yep.
the agent of the
It's
broker
exempt transaction doesn't mean she's exempt.
separate
That's,
issue, separate
Yep.
issue, right? The
yep.
example I use, and I probably should clean it up because sometimes I think I might be contributing to confusion, bad Dean, but I use the situation of unsolicited transactions that TD Ameritrade accepts at the broker dealer that other broker dealers do not. That is not a question about the TD Ameritrade agent. They got to be registered regardless of the transaction. That's about whether the transaction is subject to the jurisdiction and authority of the Uniform Securities Act. Different question, right? That would be an exempt transaction question, right?
Yep.
Or an exempt issuer. Oh, you did a good job on this. You got to make sure you're clear what the question's about. One of your long-term advisory clients has been critically injured in an automobile accident. The client is in the intensive care unit and unable to communicate. You would be able to accept orders for the customers.
Oh my God, A is just ridiculous.
Right on. Squeeze ones for yes, two for no.
I would say B as in boy.
Yeah, that's the test of point about durable. Durable powers of attorney do survive legal incapacitation. Non-durable power of attorneys do not. I would also know that all powers of attorney cease upon the customer's death. Plenitude Abundant Returns is a broker dealer registered in a dozen states. The principal office is state X. To be in compliance with the Uniform Securities Act, PAR must satisfy the record retention requirements of, this is very much a test question.
Yeah, see, I think I got this wrong on the STC. I got to learn my lesson here. It's definitely not A or B, so it's either C or D. And let me read this question one more. Planet Par is a broker dealer registered in a dozen states. The principal office is located in state X. I think it has to do with the amount of states that they're actually registered in. I'm going to say D as in dog.
Yeah, I'm just going to correct you that that is not true, what you just said. So,
Okay.
broker dealers, states, cannot impose on broker dealers any record retention requirements because we're all meeting the SEC. For broker dealers, it's going to be lifetime 6.3. And that no state can say, well, my state, it's 5. No. The other way this shows up is states can't impose on broker dealers a different net worth or net capital standard. They can't say, well, my state, you need 20. I said, well, listen, you can impose a net worth standard on investment advisors operating in your state, but not broker dealers operating in your state. Now, so that would be record retention, net worth. Now, your point about registering the broker dealer, I think it's very much simpler than investment advisory firms. No office, no retail, no register. No office, no retail, no register. If I'm a broker dealer, I have no office in that state. I have no retail client in that state. I have no, I don't register. Now, the opposite would be if I have a retail client, there's no de minimis for a broker dealer. No de minimis. One client, one retail client triggers registration. Or if I have an office, regardless of the kind of clients I have to register. So office or retail client, broker dealer registers. Then one other point, agents of broker dealers can't register if their broker dealer is not. So, you can't be registered in a state in which the broker dealer is not registered. Now, good news for you, I can't imagine that
There's not.
Yeah, come on. Now, Florida, they're saying they're going to say, "Hey, Chris, go wherever you want, man. We got you covered."
So the answer there was D, or was it C?
Yes, it was
I got
D,
it wrong.
C.
Okay. I was just using. Okay, I
just
got
didn't
there
like what
somehow.
you said
But
about why. I think you said dozen states. I didn't like why you were saying it was D. You were correct. It's D. On the real test, who cares? You get it right. I just want to
Now,
make sure.
isn't there something, and it might not be the broker dealer, again, a lot of this information is just jumbled in my head, but
Yeah.
is there something that says if I'm licensed, or if the broker dealer or an investment advisor is licensed in like 10 or more or 15 or more states, it's or
Yeah.
is there anything with that?
There, well, it is. It's very low probability, but if I start registering in states, and I would have to register in more than 15 states,
That's
then
what
I
it
can
was.
declare myself federally covered. Say,
Got
hey,
it. Okay.
owners for me to have to do all that, right?
Okay.
Regarding the use of term direct participation program, when referring to tax sheltered investments, which of the following is not a direct participation program?
C.
Yeah, REITs don't have flow through of losses, right? You would buy a REIT for the
Yep.
same, you buy a mutual fund, professional management, diversification, ease of ownership, except instead of buying proportion ownership in a portfolio of securities being professionally managed, you're buying proportion ownership in a portfolio of real estate being professional managed. And again, you don't get that flow through. Now, some REITs are publicly traded, and that's kind of nice because that means you can, they're liquid, whereas most real estate investments would not be.
Now, I see that there's limited partnerships associated with 3 out of the 4 of them. Is that
I like
typically a
that.
giveaway? Okay,
It
that's what
is.
I'm asking.
So
Good.
I take some heat because I'm one of the few tutors out there that does teach test taking tricks. I so much that I had one of my competitors go on a rant about test taking tricks, and I'm not going to respond, but I said, listen, I don't tell people to try and guess their way through the 65. I say if all else fails, would I prefer the information? Yes. But you're right. I call this the Sesame Street trick. One of these things is not like the other. Partnership, partnership, trust, partnership. Right.
Yeah.
So yeah, that you could have used that. Right. I use it on game shows sometimes, right? You can tell good test takers on the game show. If they say, Dean, Tajikistan, Pakistan, Afghanistan, India. I go,
Well, I
okay.
was more asking about just the fact of relative to the DPP
Oh
in
yeah,
general.
absolutely.
Are they typically
They're
are they
synonymous.
typically partnerships?
For
Okay.
test purposes, synonymous.
Okay.
Proponents of the efficient market hypothesis believe you could get easily a couple questions on this on your exam.
All right. So this is the one. So I get this mixed up. Is this the one that has 3 forms?
It does, but I don't see anything
Okay.
in the question yet about the three forms. But you're
That's
right.
fine. Yep.
There's a
I'm
weak
just kind of
form, there's
looking up in the air
semi-strong
as
form, there's
as I'm
strong
asking that.
form. Right on.
Okay. Um. Oh, you know what I was thinking of is okay. So yeah, I'll get this. So time horizon is the most important investment constraint. The active portfolio management. So B is definitely out.
Mhm.
Markets operate efficiently and stock prices reflect. Okay, so C. I don't got to read the rest.
Right. Now, I like to attack the question in the different forms. I like to attack it from either end. So strong form means nothing works. Nothing works. So you may as well just, put your money in an index fund, accept a market-based return. Weak form, technical analysis doesn't work because, past price performance.
Yep.
Semi-strong means something can work. And usually the something they want on the test is material, non-public information.
Got it.
Um, Under the registration provisions of the Uniform Securities Act, it is unlawful for an agent in the state to sell XY securities unless.
It is unlawful for an agent. Under the registration process of the Uniform Security, it is unlawful for an agent in the state to sell XYZ unless. So it is unlawful for an agent to sell these securities. Okay, I'm making this too hard. All right. It's Well, geez, I'm thinking, some of these look like the same answer to me.
They're pretty damn close. That should be kind of a hint. I always like to
Yeah.
give myself permission to rephrase the question in a way that makes it a little easier. Under the registration provisions of the Uniform Securities Act, it is unlawful to sell XYZ securities unless. So one of these is lawful. Three of these are not because it says unlawful unless. So I'm looking for something that's lawful. I can do it. Three of them, I cannot do it. So in three of these scenarios, I as agent can't sell XYZ securities. In one of these situations, I can sell. And it's not registered. Your point, that's why they all look alike, because they're all of these answers are saying that this is not going to be registered with the state through either qualification or coordination.
Yeah, I shouldn't be this confused by this question, but I certainly am. It is unlawful for an agent in the state to sell Apple unless,
But if you're going to use Apple, you just got the right answer if you're using
so
Apple.
A, yeah, well, there you
Yeah,
go.
I like it. Just put
Done.
something in there you're familiar with. That's exactly right.
Yeah,
Remember the NIMSMIA, the National Securities Market Improvement Act, created two buckets. One bucket of what's called a federally covered advisor, and the other bucket of what are called federally covered securities. And we don't have to register federally covered securities. You brought up Apple. That's a NASDAQ stock. New York and NASDAQ stocks are federally covered securities. The one
Yep.
that shows up the most are mutual funds. That's a federally covered security. I mean, I don't have to coordinate. I don't have to qualify. And then the last one are private placements, Reg D. That is the only one of those, by the way, that's exempt both federally, 33, and Uniform Securities Act. Now let's go through the wrong answer. Both the agent and XYZ are non-exempt. Well, non-exempt means it's a corporate security and you're an agent of a broker dealer. So you're supposed to. That's what non-exempt means.
Yeah, I should have thrown C and D out after reading it
Right.
more closely now
Right,
within 10 seconds. Yeah.
Yeah. And then it says XY.
Did I
I
lose you,
think you'd be
Dean?
doing yourself a favor.
Oh,
Yeah.
there we go. Sorry. I thought I lost you there for a second.
Okay. Well, no, let's check my internet.
No,
Oh,
you're good. It was a quick pause, but yeah,
all right. Ooh,
we're good.
the country's current account shows a trade deficit. So I like it. You used Apple previously. They can use the US of A on this one.
Deficit. Again, I look up in the air as I'm saying this because I'm thinking back to what thinking about studying. So a deficit is where I'm exporting less than I'm importing.
That's right. Now I just took the liberty of putting it in you just said exactly that. You just said it in a backward form.
Backwards. Yeah. I would have got that.
I told you when you get just on the real exam, make sure when you're right that if it's not offered to you, just say, well, geez, I'm pretty sure I know what this is. Is there another way to say this?
Yeah. Yep.
The common stock of companies within which industry sector would be most affected adversely by an increase in the general level of interest rates?
So they're going to be the most levered companies.
There you
that
go.
would be
Love it. You're
adversely
becoming a player now.
That's right. So we would immediately go A with that one.
Yeah, perfect. Excellent. I like that. Which of the following statements regarding credit risk is not true?
Okay. So A is true, so we're going to throw that away. A rating downgrade may or may not result in a lower. B is true.
That's right.
A-rated an A-rated mortgage bond has a credit risk. I'll come back to that one. Credit risk can be assessed by I would just process of elimination. I would go C as in Charlie.
Yeah, double A is better than single A.
Yep.
Right on. All the following would flow through as a loss to a limited partner except.
Lost to a limited partner. Let me think about this one. All the following would flow through as a lost to the limited partner. I think it's either B or C.
You are correct.
There's yes, yeah, B or C. I would say B is in boy.
Good job, right? That's getting your own money back to you,
Yep,
right? That's your own money coming back to you. You don't owe taxes on your own money coming back to
of course. Yeah, yeah. I didn't even think about it as simple in those terms.
you. Yeah, the current yield of a callable bond selling at a premium is calculated.
So so if it's selling at a premium, I think we use yield to call. So I would say B.
Yeah, they got you. They just clouded your mind here. Current yield has nothing to do with yield to maturity.
Ah,
Simply
of
what the
course.
investment pays you divided by what it costs you,
Yep.
right? So they just got you
Yep.
to change up on
Yep.
that mind
Yep.
trick. Right?
Yep.
Now, listen, as your tutor, you're not at risk at all, so I'm not too worried about this. And if you were, I probably wouldn't be as offering constructive criticism, which I'm about to offer you. Is you were talking about going a little too quick, but I guess it's a good thing that you have enough brain power to outsmart yourself. And we don't want to be doing that, right? Because
No.
you worked hard to learn this information. It's transparent that you have been dedicated, you've been disciplined, you've been organized in laying the base. And so, when they throw that change up, let's not put that. I don't think you're at risk at all, but that they got you by throwing you the change up there. They got you
Yep.
to look at that. And then you started bringing extra stuff into this question, probably because you've been doing the work. You go, oh, I know it's the yield to call thing. And it
Yep.
wasn't about that. Whippet Bus Line, serving most of the country, has just been informed by the Surface Transportation Board of the United States that all of its buses must be retrofitted with expensive safety equipment. The effect of this will be a significant drop in Whippet's net income. To an investor, this would be an example of.
I'm going to throw out B immediately, and I'll probably throw out C since it's so specific. And because there's stuff in there regulatory, I would say A in the question.
You got it.
Okay.
Exactly. Which of the following is not, this is stupid, but testable. Which of the following is not a market cap weighted index? Stupid, but testable.
Well, obviously D is not. I mean, D is weighted.
That's right.
I would just say B since it's the average.
And it's ridiculous because all they do is take the 30 stock prices, add them up, and divide.
Yeah.
Yeah. So yeah, it's stupid, but testable. It's price weighted, not cap weighted.
Yep.
Now you will get tested on indexes. You'll get tested on Russell 2000, which you need to know is the benchmark for small caps.
Yep.
You'll get tested on the IFA, which is the benchmark for international investments, right?
Yep. 400 is the mid cap. Yep.
You'll get tested on the Wilshire 5000.
The total.
That's right, total U.S. stock market. So that's going to be there. You won't get all of them, but they'll be in the answer set. So this answer set, I think, was a little mellower compared to the real test because the other wrong answers in this answer set would be right answers to different questions.
Makes sense.
If actual disclosure of payment of order flow is required.
B, trade confirmation.
Yeah, we have to tell our clients what our order handling practices are, right? So, Schwab receives hundreds of millions of dollars from Citadel for order flow. That's okay. It just needs to be disclosed. All of my statements regarding exchange traded funds are correct, except.
Okay. See, again, I see A and I know that is false, and I don't, my brain would know, if this were me taking the test, I wouldn't even look at the rest of them.
Well, but yeah, when you're practicing, so let's talk about that. I think on the test, I'm a big fan of what you just said, but here's why. Because, people don't realize how exhausting this thing can be. And a question like 130, you're going to need some residual brain power reserves, right? And if you're literally going through all aim and shoot point and click questions and turning them into judgment questions that aren't there, you're
Yeah.
going to be exhausted before you're done with the test, right? So now when we're practicing, I don't have a problem with checking out the rest of the answers. RTFQ, read the full question, RTFA, read the full answer set. But on your actual test, if you can conserve energy and say, boom, by the way, I also think you're performing well enough. We haven't scored it, but just, my guess is you're performing well enough that I love to be able to say this, that, even if it's one of those ones you've been fearful of with a huge math problem, give yourself permission to say, you know what, I'm going to guess B, I'm going to assign this to the universe. I'm going to make it up elsewhere. Right.
Yep. And that's the beauty of mark for review, to come back to it and to not waste the brain power on it at that time.
Yeah. And then remember, but I would still go with what you think your flash response, just so you know, if you don't get back there, you're not going to be going, oh my God, I got 30 things in the bucket. I got to go back and look at. When an agent submits an order ticket to purchase securities for a client, all the following would appear. So they're asking about the order ticket, not the confirmation.
That's correct. Oh, okay, accept. Okay, I didn't even realize that. So the current market price of the security, I mean, that must show up. The details of the order, that means whether it's solicited or unsolicited limit and all that stuff. Yep. The broker dealer's name, the agent's name. Why don't we go with B as in boy?
You missed it. It's the current market price of the security.
Really?
Yeah, it's on the order ticket. Yeah, we don't say what the current market is because that's fluctuating all the time. All we simply say is market or limit or, whatever it happens to be.
Well, I figured if I do a market order, the trade confirmation is going to spit out, hey, you bought it at $87.
Whoa. It's not the confirmation. It's the order ticket that we're using internally to buy the stock for you. So I'm a broker. You say Dean buy GE. This isn't the confirmation. This is me.
Got it.
Right?
Fair enough.
Due to changes in market rates, a corporation is able to purchase some of its outstanding 20-year bonds at a discount. Which of the following is correct?
Yeah, these ones I'll struggle with.
Yeah, balance sheet stuff is
Yeah, so due to changes in market, a corporation is able to purchase some of its outstanding bonds at a discount. So immediately liability would be reduced.
right on. You're on the right track.
So working capital would, I'm thinking aloud, but I imagine that would be increased because of it.
Whoa.
Okay.
You bought something, right? So.
Oh, true. So yeah, liabilities went down, your cash went down, your asset went down. Okay.
Yeah, right. So we can think of your own personal situation, right? If you pay off debt, your working capital is reduced because you just spent cash, right? And you didn't pay off a current liability, you paid off a long-term.
Okay.
Right. So your working capital is reduced. It wouldn't be it wouldn't be reduced if we used it to pay a current liability, because that'd be a wash. So working capital is going to be reduced. So assets.
Say that part you just said about a wash one more time, Dean. You said it a few times, and I got to make sure I understand it.
So this is asking about our working capital. Our working capital is our current assets minus our current liabilities. So, let's say Dean has a working capital of $50,000. So that means if Dean takes his current assets, his cash, and things he plans to turn to cash within the next 12 months, and I minus my liabilities, that's $50,000. Okay, so now I pay off my loan, credit card, short-term debt. I pay off $10,000 worth of that. My cash goes down 10, my liabilities go down 10, my working capital is still $50,000. It's just I have a less of an asset called cash, less of an asset called cash, but I also have a less of a liability, dollar for dollar. There has been no change in my working capital. If I take my cash and pay off a long-term liability, remember that would mean different now because now I have less of an asset called cash. I have the same amount of current liabilities. They're still sitting there. That number hasn't changed. So my current assets, which are now a lower number,
Got it.
is now being subtracted by the same number. So my
Got
working
it.
capital went down. Now,
Got
and
it.
there you go. Now about my net worth.
That's the
Net worth
asset
is
minus
my asset.
liabilities.
There you go, right? So
Yeah.
now I've got assets minus liabilities equals my net worth. And so now since I have less of a liability, my net worth has increased.
Has increased. So 2 and 3.
There you go. That was a
See,
time.
what you just said was so important that it just clicked. I had to define working capital, that it's current, and therefore, if I'm paying off a long-term debt, it's not going to affect the current liabilities. I mean, that it just clicked with me.
There you go. And then the one they like on the test is when the company declares a dividend that causes working capital to decrease, right? That's the one they like because now I have a new current liability, right?
But when I pay it, then the asset
Has
decreases.
no effect because of what we just talked about, right? I got less of an asset
Yeah.
called cash. Pay my bills has no effect on my working capital. A fixed premium variable life insurance contract offers.
2 and 4.
Yeah, you know, I kind of feel bad sometimes when I get professional insurance people and they say, "Hey, Dean, I know this stuff." And I go, "Yeah, great. Maybe you can get 2, 3 questions, right?" So there is some familiar stuff. You are correct. Under Uniform Securities Act, an investment advisor's current clients must be delivered a brochure.
C.
Yeah, there you go. Do you know how many days we have to do that?
So the IA is it's either 90 or 120, and it's jobbled
90,
around in there. So
that's right. 90 is the SEC, 120 is for customers.
okay, so they're both right. Well, you know, you're right, I guess. Either way, yeah, got it.
Which of the following situation violates the contractual requirements of investment advisory partnerships under the Uniform Securities Act?
Ooh. Partnership with a 5% interest. So I'm going to throw D out. A renewal of an investment advisory contract. So it's either going to be C or A, and I'm having a little trouble reading A just because I'm looking on my phone.
Yeah, that's
But
yeah, you're doing this on your phone. That's crazy.
I know because my computer and the internet here is just a little off.
Man, that's crazy. I mean, you know, I'm with you. I'm simpatico. So let me just walk you through this. Minority changes require notification. Change in control requires consent. So the answer here is C because it's saying we're not telling you about
That's
a
what I
change.
would have gone with. Yep.
Yeah. So just be careful. If it's just a change, then that would be different than if it's you know, it's a change in control. Change in control requires permission, and change
Yep.
in just minority interest notification. An investor plans to fund the college education for her newborn child by purchasing 5,000 of investment grade bonds on an annual basis. She is most likely using
To fund college education for newborn. So bullet strategy and barbell strategy are option strategies. The
Yeah,
five
yeah,
29 wouldn't have anything to do with it. So simple
right.
laddering, yeah,
Uh,
is
there
probably
you
the
go.
answer.
Well, be careful. So laddering is usually going to be the right answer. Is that your right answer? Is that your answer?
Well, it's what I would have put, but obviously B is going to be the answer here.
And nope, it's not. It's when we want to have all the bonds come due when she's 18. I'm gonna buy her 18-year bonds today, 17 years to maturity next year, 16 years to maturity the following year, 15 years. That's not a ladder bond portfolio. That's a bullet. All the bonds are coming due at the same time, right? So this is a bullet
Got it.
strategy.
Okay.
Laddering is usually the right answer because laddering is the most conservative. And that's where we always have bonds coming due that we can reinvest at today's interest rate, right?
Got it.
So a little different.
Yep. So A is the correct one as you
Right.
would. Okay.
All right. So you missed that one. Not a bad miss, though.
Yep.
More often than not, that's correct. Defalcator investment advisors registered in state AKNR would be required to provide a balance sheet, a part of its brochure, if it's charged fees.
So as I recall, now there's two of them here, and I'm thinking out loud. There's a $500 and a $1,200 one, and both and I think it's and has to be 6 months or more than 6 months in advance.
Yeah, I think you're kind of squared away on that. So now you just got to make sure that you don't try too hard.
Okay. um, I'd say B.
Good job. Yeah.
Okay.
So, don't, I was afraid you might start getting wobbly on the 500 and you just, gave me the right answer. And so now B would be the problem, right? So, according to NASA's statement of policy on dishonest and unethical business practices of broker dealers and agents, an agent may
So it's either C or D. Again, these were always come down to two. Not
Right.
recommend a specific professional money manager to those clients who want professional money managers. Well, I guess that would be unethical. Yeah. So I would say D is in dog.
Yeah, D as in dog is correct. When giving advice to a large pension plan invested heavily in large cap stocks on how to reduce their systematic risk, you would probably recommend that they
Well, there was a big pause there. So if you read the question, I didn't hear it, but I'm going to go ahead and read
Oh,
it.
okay.
But
When giving advice to a large pension plan invested heavily in large caps on how to reduce systematic risk, you would probably recommend they
D.
increase their portfolio. Um, yeah, it's not a bad miss. Um, but the key point here is reduce risk mitigation. Is I say what I'm going to do is I'm going to buy some portfolio insurance. I'm going to buy some index puts, and if the market goes down, the value of our index puts go up. And so A, right? You
Yeah,
remember,
that's what it was down to. Yep.
yeah, you can't diversify. You kind of violated your own great thing you told me is that you cannot risk prevails despite diversification from systematic risk,
Of
right?
course. Yeah.
You just told me that we diversify more and we're somehow going to be able to do risk mitigation. Not true when it comes to systematic risk. So what we're going to do is buy those index puts. Which of the following a method of determining an internal rate of return by portfolio manager with the influence of additional investors' deposits and withdrawals? This is testable. And they either are asking you about like a separate account where I'm managing for the doctor versus where I'm managing a mutual fund and I actually have money, for coming in like the tide and going out in terms of people making investments and people redeeming.
All right, I'm back with you, Dean. Maybe it's my internet here, but I just got off the
Let me see.
Wi-Fi.
Mine is saying good. Let me just check mine.
Okay.
Mine's saying I'm all good. So
Okay. We'll
so
go back to this then.
yeah. So are you on this? Where did I lose you?
You lost me. I at the end of seven. I missed D, and the answer was A. The broad put or the
Yeah.
broad. So I didn't even see this question yet. But
Yeah. Okay. So here was where we're at now.
yep.
What of the following is a method. I think you're going to do well. But if you can adapt and overcome, most people would have said, Dean, can I reschedule my practice test? I would have said, fine. But sucking it up on a phone, I feel bad because I used to be such a road warrior myself. And I had a little net book that I ran my whole life on. And then, now I'm used to a studio with two 27-inch screens. And now the idea of trying to do something on my phone, like, oh, I can't do it. Which of the following is a method for internal and determining internal rate of return by portfolio managers without the influence of additional investor deposits or withdrawals? Now, what I said is this is very testable. I would expect you to get almost verbatim this question. And the answer that you are going to come up is going to be based on whether it's a portfolio manager of a mutual fund versus the portfolio manager managing a particular portfolio.
So immediately I would have said C, but you're making me second guess that now.
Well, it
um,
is the time weighted return because it
okay.
says here you don't have it, right? The other one would be A. The opposite would be A.
Yes. Yeah. Where you're taking in account inflows, outflows, dividends, interest, all that.
That's correct. The process of determining how portfolios funds will be apportioned amongst different categories of investments is known as
D is in dog.
yeah, that's the name as you point. Click. We got to get those. Yeah.
Yep.
It's not uncommon to find financial planners who use their home as a base of their operations. When a financial planner who works from home is also registered as an agent of the broker dealer, she must.
I'm going to throw B out. Not remain open during hours when the broker dealer is closed. I'm going to throw C out. Interrupts separate from living quarters. So A or D both sound right to me, but coin flip, I'd say A.
Yeah, that's the more important thing.
Yep.
I mean, that I might question she's. I had a studio penthouse apartment in San Francisco. It was a studio, but it's a pretty damn good studio. Right?
Yeah.
An investor interested in obtaining the benefit of professional portfolio management has been tracking a particular investment company for the past several years, or several months, excuse me. And so doing it becomes obvious the market price of the shares moves in direct relationship to the computed NAV. The investor must be following.
I'd say it's got to be C since a closed end can trade at a premium or a discount to the NAV.
Yeah, it's got to be, yeah, boom. Is that what you said? C?
C, yep, because a closed end fund could
There you
trade
go.
either way. Yeah. Okay.
And I'm very tested this idea of open versus closed. The gain on a sale of a security held as investment will be treated as long term if the security is held for more than.
D.
Yeah, give me more of those, baby.
Yeah, for sure.
Which of the following statements is true regarding the registration of investment advisors?
So I know 2 is correct, but I'm just thinking about 3 right now.
That's right. You are
Oh.
correct. Who is
Well,
correct?
I don't even, oh no, there is 2 and 3. Whether a person is registered with the state or with the SEC depends on the type and scope of the person's advisory business.
And then remember, person doesn't not always mean living, breathing human being.
Yeah, yeah. Well, I'd say A, 2 and 3.
Yeah, you got it.
Yeah.
An employer has a qualified retirement plan that promises to pay employees a specific percentage of their average salary if they complete 20 years of service. This type of pension plan is.
I mean, it's either B or C, and I
Right.
gotta remember the 2, so employers. So I always like think of a defined benefit, well, pension, again, as a pension, right? It's gonna pay out X
Yeah,
amount of
I think of it as like
every month.
your granddad's pension plan. Not many
Yeah,
employers anymore pass these puppies out. I mean,
yeah.
you know,
That's a qualified retirement plan that promises to pay a specific percentage of their salary. B is in boy.
right
Okay.
on, right? The other test question is in that plan, the employer assumes the investment risk. And a defined benefit plan, the employee assumes the investment risk. It's much more difficult for a corporation to have an unfunded pension liability if all they offer is 401ks.
Yeah, makes sense.
In designing a client's portfolio, registered investment advisor rep of Great Wealth Advisory Services recommends the purchase of several stocks from the inventory of Greater Wealth's wholly owned broker dealer. Under the Investment Advisor Act of 1940, this activity requires written.
So registered investment advisor representative. So it's acting in a principal capacity.
That's right.
Disclosure to the client. So. I'm gonna say it's either A or C, and the
You're
difference
correct.
there is completion or execution. Would they have to do it before they even put the order in is the question. Disclosure consent prior to completion, which probably means settlement. Coin flip, I'm gonna say C.
You missed it at say.
Of course, there's that 50-50 again.
Yeah, well, now you know, but hey, listen, even with your 50-50s, I think you're doing fine. So I don't see any red flags. The time value of money is part of the computation for.
Well, it's either C or D.
That's right.
Here we go. C.
Yeah, good job. The real rate of return would be about inflation.
Oh yeah, that's right. See, I always think they're going to say inflation adjusted return for that.
Yeah, they could, but it's the that's the
Okay,
challenge.
synonymous. Okay.
Yeah. So sometimes they the term churning means.
2 is definitely right.
Mhm.
Trading unsuitable securities in a client's account. Give me well, the good news is they don't have 2 and 3, so we're gonna go A.
There you go. There you go. Please don't give me the 50-50. Bond investors use the discounted cash flow formula to determine. I like this one. So remember, again, this is reflective. They're not asking you to do any math. They're just kind of asking to have a general understanding. You say what?
C.
You are absolutely correct. Right. What else could we use discounted cash flow besides bonds? Can we use it on stocks?
I think if the dividend was, what's the word I'm looking for? Consistent enough, maybe?
Yeah, that would be called test question, the dividend discount model.
Yep.
So they might say discounted cash flow as applied to a stock could best be described, and you'd come up with dividend discount model.
Is it the same
Okay,
formula?
same formula.
Okay.
Or you could assume that the dividend you're receiving is going to grow. You can't do that in preferred stock, but you currently could in a common stock, and we have a dividend growth model. By the way, all of the
Yes.
discount cash flow, whether it's for a stock that pays a dividend or a bond, it's a valuation technique, a valuation technique. And so we're trying to come up with that present value, and then based on that, decide whether it's fairly valued, right? So we have a concept called net present value. So net present value would mean I do this calculation for the bond and I get 900. And the bond is priced at 890. I go, woo, I should buy the bond because there's positive net present value. If I
Okay.
do the present value and it's 900, and then the bond's priced at 910, I say, I think I'll take a pass. It has negative net present value. Net
Got
means
it.
comparing it, right? Now,
Yep.
one thing that shows up sometimes is that we do this present value calculation, and the bond is creating pretty damn near that number. That would be a sign that the market damn is efficient, because I'd rather it be inefficient. I could get some positive net present value. But if there is none, that means everybody's doing the math, right? So if we're all doing the same math, we're all going to come up with the same valuation.
Makes sense.
All the following statements regarding zero coupon bonds, which of the following statements is true?
Okay, one is definitely out, or excuse me, A is definitely out. The investor reports the difference between the purchase. On selling at a premium. C is out. The investor has. I mean, B and D both seem right to me, so here we go. I'd say D is in dog.
Yeah, B is not true because you shouldn't have anything left at maturity. If you're actually doing this as you go along, there should be nothing at maturity left, right?
Well, I
The
guess the way I took that
difference between
question
the
is,
purchase price and maturity is ordinary income at maturity. No, you're reporting that as ordinary income each year.
yes, fair. Okay, thank you.
Straight line amortization upward
Nice,
accretion, right?
nice. Okay.
According to the NASA's model rule on unethical business practices of investment advisors, investment advisor reps, federally covered advisors, which of the following circumstances may an investor advisor disclose a client's account performance?
I mean, they all seem like they shouldn't. So I would just say D.
It's 2 and 4. I don't share your
Wow.
right? Unless the government is asking. I say your confidential information is your confidential information, and I will only share it with the government. If the government gives me a subpoena and they want to know about you, I'm rolling over. If you're getting divorced, and a court order tells me they want your records, then I'm turning them over, right? So it's government basically, 2 and 4. Other than that, your
Okay.
private information is your private information. So what'd you
Done.
say? You said one only?
Yep.
Well, I like you. I would like to have you as my investment advisor. I like that. That's a better attitude, right? You say, Dean,
Yeah.
even if the government asks me, I'm not rolling on you, Dean. Like, all right. A client is in the 28% marginal federal income tax bracket and invests in a corporate bond with 8. To calculate the client's after-tax rate of return.
Yeah. So C.
Yeah, that's exactly right, right? We're going to take the 8% times what the government is leaving you with, and that would give us all 1 minus your tax bracket, basically. Stock prices over the counter market are determined by, very much a test question.
I mean, A and C both sound right to me, but I would say C.
Yeah, remember competitive bid is what market makers would have, but that's not how we refer to that. We would refer to that as the highest
Right.
bid. The
Yep.
B is the auction is New York, right? So
Yep. Yep.
this is over the counter. New York is B. If they would have said New York, you would say B. An investment advisor rep is prohibited from
Disclosing to clients that he is. Even with treasury fee. Well, I can throw out a couple of them. It's just as part of a comprehensive selling life insurance policy to an advisory client issued by a company represents even. So he can do A. So I'm going to throw A out. I'm going to throw. I'm not going to throw B out yet, but it seems like it would be wrong. Disclosing to clients that he is not buying the security being recommended to them from his own account. He's under no obligation to do that. So I'll throw C out. So it's down to B or D for me. Charging a fee for an investment advisor, then earning commissions on recommended trades without disclosing the nature of the relationship. I'd say D as in dog.
you are correct.
Okay. Probably thought about that one too much, but
Well, that's all right. Well, like I say, it's, I would prefer as a tutor to work with somebody who can outsmart themselves, and it means they got enough brain power to get it done. The downside of that is, you might burn up some unnecessary brain cells or overthink it, but it's better to have too much brain power than not enough at the end of the day.
yeah.
So, client calls, they just read about a European option and just doesn't know what it means. Yeah, you would explain that it is.
C.
Right on. And America style would be the opposite. An investor is long to put on 100 shares, has the right to.
There's long a put option, so we bought a put option. It's the right to. B is in boy.
You have a right to sell, right on. You're something pretty good at options. Did you put all that work in, or do you have already a?
Well, 15 years ago I took my Series 7, so
Oh,
I really
you've
didn't.
done much better on
Yeah.
the options than I usually expect 65s to do. A commodity speculator purchases 1,000 bushel wheat futures for 75 cents. At expiration, settlement is 85 cents. This investor has.
I mean, unless I'm overthinking it, I would say A.
Yeah, it would be 10 cents times 1,000. So let me
Yeah. Okay.
10 cents times 1,000. That's the side of the contract. You are correct.
Yeah. Sometimes again, I just.
The primary function of the Federal Reserve is.
D.
Right on. That's very much a test question. How do they do that?
Through. Well, controlling interest rates, but more specifically
There
through
you
repo and reverse repo. I'd like either, putting more money into the system or taking it away
yeah.
through those arrangements.
Yeah, you're definitely going to get tested on that. And what happens if the Fed raises interest rates?
As far as what do you mean? What happens? Like in what aspect?
Well, if they raise interest rates, what I'm looking for, sometimes they ask you about the effect on the dollar.
Oh, okay. If
Based
they
on
raise
it,
interest rate, the dollar is increased.
right
I
on.
believe, yep, exports would be decreased, but the money supply would be
Oh, my God,
increased as well.
gracious.
Yeah.
Listen, my friend, you are pretty damn solid on options. It sounds like you're pretty damn solid in economics, so that's a good sign. An agent is using social media to try build her business. If her Facebook page allows for followers to like her, that would be considered.
It's either B or D. And I remember reading it. I'd say D, static.
When I was static, you're right about your 50/50s. Static would mean it doesn't change. And so this is kind of
Interactive. All right.
yeah, it's interactive. I wouldn't worry about it. The test question is, this is called prudential regulation. What do I mean by that? The NASA, FINRA, SEC says we don't have rules about social media. You need to have your own internal rules prudential found in your written supervisory procedures about what are your social media policies and what are you going to allow prudential people to do or not do. Are they allowed to, do LinkedIn or Facebook? And then every new hire has to read those written supervisory procedures. And then you're signing, acknowledging that you read it and you understood it. So, for example, Prudential doesn't allow a Facebook page, and there's your mug. I go, well, what are you doing there? And you say, well, I didn't know. I said, well, here's your signature. A lot of firms now are getting a little more aggressive in allowing the use of social media. Why not?
Yep.
Each of the following terms is commonly found in modern portfolio theory, except I kind of like these questions because I always tell people it's mainly about inputs and outputs, not so much can you actually crunch the math.
Be honest, I really don't know about the modern portfolio theory. I think that's the one that basically says people are trying to maximize their returns while taking the
Oh,
minimal
you
amount of
nailed it.
risk.
What do you mean you don't know it? That's the definition.
Yeah,
You
but none of
nailed it.
those
That's
answers are
exactly the
even close to
definition.
that. None of
That
these answers
is
are
the
lining up
definition.
with that.
So what goes
Um,
along with what? Now let's just stop there. So
okay.
what goes along with that? If you just told me you're trying to maximize your returns while minimizing your risk, that seems like that goes with a word like efficient,
Yep.
right? Is what you're
Yep.
doing even feasible?
Yep.
Would you like to compare the volatility and be rewarded for that volatility? Do you have some expectations about risk versus reward?
Yep. So it's either C or D, but again, I know
That's right.
that's I
Now
should know
you
that.
should be able so you should be able to get rid of get this now. Because now you got to decide, well, I think I know a little bit about an internal rate of return.
Yeah, I would say the answer is D.
Well, it's actually C because internal rate of
Wow, you
return
see that?
is
Four
about
50/50s all wrong.
well, that's okay. You're still okay. You're still okay. So like I say, don't panic. But internal rate of return has nothing to do with modern portfolio theory. That simply has to do with present value, future value. You know, what rate of return will take 10 million to 20 million or take a
Mm,
bond from 8.5 to 12.5.
got it.
That is not anything to do with modern portfolio theory.
Okay, that's rule of 72 stuff. Got it.
Yeah, exactly. That's exactly what that is. So, anyways, I just thought you were going to get that because you gave me a good definition. By the way, don't beat yourself up because the things you think, well, I don't know, and then you give me a perfect definition. And then what you want to do is just double down on that. Say, okay, well, can I use that to kind of get closer? And by the way, 50/50, I just want to let you know is better than 1 and 4. So to
That's
get to the
true.
50/50 is still 1 and 2 is better than 1 and 4. So I
You're
work with
right.
people. You don't even get it to the 50/50. They don't get a
Yeah.
chance to even get the miss. So, oh, yeah, like I say, be kind to yourself. Oh my God. Annie Lear is a securities analyst employed by Imperial Benefits Inc., a registered broker dealer. She is assigned to cover a number of different equity and debt investments. One of the investments is Taylor Inc., a manufacturer of a wide range of children's toys. Based on her extensive analysis, she determines that her expected return on the stock given Taylor's risk is 10%. However, when applying the capital asset pricing model, the result is 12% rate of return. Tyler's stock is
D?
You are correct. You
Yeah,
are.
see, again, that means a major difference. Overvalued means a major difference to me than what it actually means right now in this question, but nonetheless.
Well, yeah, so as it says, the result is a 12% return and it's 10, right?
Yeah,
Expected return. Yeah, so you're on the right side. By the way, I would tell
yep,
you as a test taker, almost always you can get to a 50-50 even without getting to the 50-50 if you have two opposite answers.
yep,
Usually you have two opposite answers, it's one of the opposites.
fair enough, agreed.
Being concerned about price volatility, a bond investor wishes to compute the duration of a bond. Duration is testable. It's just the fancy word for volatility. Which of the
Mhm.
following is not a necessary component of that calculation?
B as in boy?
Right on. The rating has nothing to do. That's a different risk. That's credit risk.
Yeah, yep.
And the long and low is the way to get this. If I ask you which bond has the longest duration, long and low, baby, longest maturity, lowest coupon.
I can't tell you how, I've heard you say that in a bunch of YouTubes that I've watched, and that has stuck with me and that has helped me through
Good.
so many answers, even the reverse side of it when they're
Well,
talking
there you
about,
go. Sometimes people will
yeah,
call me. I said, well, read it again. It's the opposite answer.
yep,
So
yep.
glad to hear that. Which of the following is not required under the customer identification uh, program?
It's either C or D, but
Yeah, that's
um,
stupid.
C.
It's actually D. You are pretty good on missing the 50-50s.
I'm telling you, I should just start going the other way.
Yeah, well, I don't suggest we do that. I mean, but that being
You're
said,
right. Your
I
stuff
had an
should be
accountant though.
irrelevant.
I had
Yeah.
an accountant that and he was so mad because he was on the inside looking out as an accountant on debits and credits as it relates to his exam, which was about accounting at a brokerage firm, and he is just ballistic. And I know why he's confused, but I could not unconfuse him. I said, you're looking at the mirror and instead of beginning behind the mirror. I know it's aggravating to you. I know you're very competent. I think you just need to start reversing the answer until either lights go on or they don't, right? So, but in your case, I don't suggest because these aren't 50-50s where it's like opposites. It's
Yeah.
50-50s where, it is there. And which of the following cases would an individual representing an issuer in a transaction with a client be excluded from the Uniform Securities Act definition of an agent?
Which of the following cases when individual representing an issuer, so agent of an issuer, transaction with a client be excluded? Okay. The individual successfully solicits an order from the insurance. And this one might take me a second here.
Yeah, no worries.
With a client being excluded. A.
Good job. That's a tough one, man.
It was.
If I were in charge, I'd give you more than 1 point for that one. That one was tough. All
Yeah.
right. Good job. The employer does not get a current tax deduction when offering which of the following retirement plans?
Employer does not get a tax deduction. D.
D is in dog, deferred comp. You are correct.
It's a non-qualified, yep.
That's exactly right. Investments in which of the following offer the best long-term protection against inflation? That is a guaranteed test question.
C.
Right on. An agent learns of material, non-public information. Wow. Which of the following with respect to the information would not violate the Uniform Securities Act?
D just seems logical.
Yeah, discussing the situation with the super. I always go, right? Whenever you can go to your supervisor and say, hey, I'm seeking your guidance.
Yeah.
Always going to be the right answer, right? And even if it's not, your guy's going to say, you just keep doing that. That's the right answer. The financial ratio shows the relationship between the price of a company's stock and the company's net worth is.
So the price of the company's stock and the company's net worth.
I like this one.
It's definitely not A. So it's either C or D. Again, here we go again.
You are correct. It's either C or D.
Yeah, and I know the book value is obviously an accounting, more of an accounting.
Well,
I'm not.
I think, listen, I think when you're getting these 50-50s, I do think you can say, okay, let me go back and look some more hints. More hints.
I'd say D.
There you go, right? The
Yeah,
price
I would have gone with that.
Yeah, there you go. That's definitely, I like this one. Again, it's just another example. I'm not asking you to do the math. I'm doing now. This would be part of what we call test question, the fundamental analysis. And if I'm a value investor, I'm looking to buy the stock for close to price to book. I thought that was pretty embarrassing, but I like the thesis, but embarrassing for my friends at Citigroup. They were talking about Bank of America, which would be the comparisons and valuation, and JP Morgan are trading at 1.2 times book value, price to book. And they said Citibank is only trading at 60% to book value. In other words, Citibank is worth more dead than it is alive. And the fundamental analyst said, if she can just get it to 80% of book value, that would be a 30% return. So his premise is, let's buy it at a discount to book and, hope she can work some magic. She doesn't need to work a lot of magic to get a good return. And by the way, she's been selling off some of their things like, their foreign subsidiaries and things like that. So you would feel good as a value investor. I wouldn't buy Citibank myself. I'm just saying that's a good metric, that price to book, saying you got some safety there. If you're buying it for less than what it's worth if we liquidate.
Yeah, now that I read that question, net worth and book directly correlate. That makes sense.
Exactly.
Yep.
When reviewing nationwide industrial production figures, oh my God, an analyst notices that inventories have been rising. From that information, one would gather the economy is most likely which phase of the business cycle?
So it's not a good thing. That immediately I'll put.
Yeah, I
like
that. I like that. I like that. I like that thinking. I think you get it right with just English.
C.
Yeah. I like you just put that right into plain English. Put into plain English. The question kind of became I'm sure that ended up being a little easier for you than the person who wrote it thought it was going to be.
Probably, hopefully.
Which of the following statements regarding modern portfolio theory is not correct?
Okay, one is the definite, or A is the definition.
False. 3 of them are true, and 1 of them is false.
Yep. I mean, I don't know if I got to read any further than B, honestly.
Well, I think you're right. That's the correct.
Yeah.
You're never going to get beyond the efficient frontier. That's just impossible. right? That's
Yeah,
how.
those words like always and must and, you
Oh,
know,
there you go.
guarantee.
I
Yeah,
totally
yeah,
believe in that. That's right. Unless it's like, when should you lie, cheat, or steal? Then never. When should you?
yeah, yeah.
Other than
True.
that, you're right. Stay away from socially pejorative terms. Tim, Jim, and Kim are equal partners in TEJK Investment Advisor General Partnership. Tim decides to sever his relationship with the other partners and work for a different firm. When, if at all, must clients of TJK be notified of Tim's departure?
I mean, I'm looking for the word promptly, which isn't on here, but I would
Well, there's
say,
another one that's close, though. I told you,
I
you're
know.
close. So, if you like
Yeah.
promptly, what's closest to promptly?
C, reasonable period.
Yeah. Whenever they should say, should we be fair and reasonable? We should say, yeah. They say, should we be unfair, unreasonable? Never, right? So, civil liability may arise on the Uniform Securities Act if which of these occur? If which of these occur?
Yeah, acting. 2 and 3. So D.
Yeah, right on. Good job. Which of the following is concerned are considered an associated person of a broker dealer? I like this question.
Boy, Bravo.
Yeah, they're asking who need not be registered, right? So you're
Yeah.
right. What'd you say? B is in Bravo?
Yep.
Which of you're on the backside of the question. Which of the following is an associate person? You told me a clerical person is an associated person. It's what they're asking you is here an agent, right?
Oh, got it.
Yeah, so clerical person who's not authorized to accept is not the associated person, right? Here, a
So it would be
secretary.
A.
Yeah, you're on the backside of that question.
No,
By the
sorry,
way, and
we'll
I'm not
leave.
worried, by the way, because you would have been
Yeah.
correct. More often than not, Chris, they're going to ask you the opposite of that. So you would have been correct. So you're on the backside here. What I mean is, more often than not, you are going to recognize the people that are not. And that's what you did, basically. You told me who's not.
Yeah.
Right.
And now that I see associated and got it wrong, I will never miss that again.
Well, the good. Well, that's part of the process. And
Yep.
the good news
Yep.
is you're not at risk. So that's the good thing, right? I mean, you're not, you're the ones you listen, again, we've talked about it. I just want to reassure you, I am, as a tutor, much more comfortable with people who are missing questions because they're on the backside of question, but it does reflect they have the knowledge base rather than somebody who's just taking, a random walk and throwing something up there and seeing what sticks, right?
Can we change that to B since I really did get it wrong?
Absolutely. Absolutely. A high net worth individual wishes to know when a gift can be made this year without being obligated to gift tax. You would respond, there is no gift tax when the gift is made to.
See, I'm under the impression that I can give a gift to anybody for any reason, anytime, up to $18,000 a year.
Yeah,
But I'm gonna.
without being obligated to pay the gift tax. I'm with you. Read it that way. If you read it that way, then I guess then I'm going to say, okay, well, we don't have a choice that says that. So
I know
I
exactly
think
why
I
I'm
would
saying that.
revert back. What I was looking for is a spouse, but then it said non-citizen spouse.
Me too.
That was the answer I'm looking for. So now I'm going to go back And now I'm going to use my Sesame Street trick.
Me too, which is C when I do
Yeah,
it that
right,
way.
because the charity, right? Because with charity, we give
Yep.
the charity, the 501c, whatever. I
Yep.
agree with you that that's not really, a good thing, a good answer set. Which of the following is a risk common to all fixed income securities? By the way, that would include preferred stock.
See, I know the answer is going to be A,
You are correct.
but like a zero coupon bond, I know it has no reinvestment risk, but does it really have interest rate risk
As of the
if I buy a
second,
20-year bond, you know?
not if you, so let's just talk about a test question here. Let me first answer, and then give me the test term.
Okay.
Um, in the secondary market, you are certainly in a zero coupon bond exposed to interest rate risk because there's no coupon. That thing is going to be the most volatile. Now, test question. You are immune from interest rate risk if you do not participate in the secondary market. So how do we make a customer's bond portfolio or fixed income portfolio immune? It'd be by not participating in the secondary market.
Holding it to maturity. Yeah.
That's right. That's right. That's called.
Yeah.
So that's what makes a bond portfolio immune. That is testable. That's the term for that. The term for that is
Got
I
it.
say, listen, I know you're going to get your statement every quarter, and I know interest rates have been going up. But remember, that's just a price if we sell the bonds, and we're not going to. So stick with it, my friend. But
Okay.
in your point, the zero coupon bond is in the portfolio is going to be quoted on it's going to be flying around based on that interest rate move, right? So
Yep.
what you're saying there is correct. And that is a test question. How do you make a client's bond portfolio immune from interest rate risk? And you wouldn't answer zero, because it would be any bond. You hold the bonds to maturity.
Fair enough. Yeah, you're right. Guess that would apply to all bonds. Good point.
By the way, yeah. And here's the thing, right? Our friends at Silicon Valley Bank, oh my goodness. They thought they were going to be able to hold their bonds to maturity. But then, they had all kinds of depositors come in and wanted their money, right? And so
That's right. Yeah.
now they got to sell the bonds, and now they're going to realize the loss.
Yep.
When a variable annuity is annuitized, when a variable annuity is annuitized,
So I would say it's either C or D.
you're correct.
I would go D.
You are, I love when somebody tells me what their foibles are, and you are right about your foible on the 50-50. But now
So
remember,
it is C. Yep.
part of this
Because it's
process,
already annuitized. Yep.
yeah, that's right. Part of this process is that certain one of these you will not miss given the 50-50 again. D would have been right if it said based on the assumed interest rate,
Mm,
the error. So if that said the number of units redeemed each payment period varies based on the performance of would be based on the error, the assumed interest rate. So it's actually C. The number of
got it.
units it stays the same. It's if the payment goes up or down based on the error.
God. Just so we're
As I
keeping
said,
score
that's
here, that's
again,
six 50-50 is wrong.
yeah, well, yeah, but I told you too. The other thing that is good that you're when you're missing 50-50s, I'm still okay with that because the base knowledge, it's usually you're off like a little thing here, a little thing
Mhm.
there. I know it's aggravating, but it's not like you're in left field, right? It's not like
Yeah.
I have to say, hey, 65, man, it's over here. You're on it. You're on it, right? We just gotta get
You're
you
right.
the flow a little better, just a better flow. And I think
Yeah. And I
yeah,
knew it. The minute I should have looked at the word annuitized. That was
yeah,
the big difference there.
that's
Yep.
right. Under the SEC 33 Prospectus Act, which of the following may be an accredited investor?
Definitely two.
Definitely two.
Partners, officers, and directors of the issuer for a particular issue. Well, I was looking for 2 and 3 on there, and that's not on there. So, um, again, I think one is more of an institutional buyer. Whether that could be an accredited investor or not, I don't know. But I would say two only. C.
You missed it. It's all of them.
Is it okay?
Yeah, it says a wealthy person in some case. I don't worry about this because it's on the test. It's going to be they're going to give you the case. $1 million net worth, exclusive of primary residence, 200,000 annual income, married filing jointly 300. And good news for
Okay.
you, when you pass your 65, you too will be accredited, meaning you can accept invitations to private placements, even if that wasn't the case prior to passing the 65. So I get all kinds of people to understand that, and they tell me they're taking the 65 being a credit investor. I said, well, you're missing the thing after that, in good standing. That means you just can't be a 65. You got to be a 65 that works somewhere. Right?
Got it. So to be fair, just so I can understand that, institutional buyers are accredited investors,
They
correct?
are. That's right.
Okay. Yeah.
Yeah.
I always think an individual as an accredited
Well, yeah.
investor determined by the administrator.
There you go. Yeah. Well, be careful. This is 33, not the Uniform Securities Act. So be careful. All
Federal,
this
got it.
is you can accept an invitation to a Reg D.
Okay.
By their very nature, pooled investors offer investors.
So I'd come down to B or D immediately.
Right on.
I mean, I guess by the question source, I'd say B is in boy.
You are correct.
Okay.
You should, by the way, if you said C, you should flunk the test immediately.
I didn't even see what it was.
If you said C, your seat should just shoot you into the ceiling and they say you're out. When a client is interested in investing in commodities, you would expect to discuss
Oh, geez, I misread the question. B is in boy.
Yeah, that's a layup.
Yep. Wow.
There are occasions when an investment advisor plays a role in securities transaction with or for an advisory customer. And which of these situations is the prior written consent of the customer required?
There are occasions when investment plays a role in securities transactions. C.
Right on. Good job. That's
Yep.
agency process where I recommend I'm being the agent to both parties to the transaction. An investment advisor representative looking for a suitable investment for a client. The investment advisor reps wants to find something that will offer an attractive return commensurate with its systematic risk. The choices have been narrowed to security C and security L, and the selection will be based on alpha. C has a beta 1 and earned 13%, which equaled its expected return, while L has a beta of 0.A and earned 10.1. The alpha of security L is.
All right, let me work on this one here.
Yeah, take a deep breath, right? You take a deep breath and say, I'm either going to go for it or I'm going to sign it to the universe. And if you're going to go for it, then you're going to have to, settle in and say, okay, what can I figure out here?
All right, I'm gonna need a minute on this. I'm actually gonna
No,
pull
no
out a
worries.
pen
No
and
worries. Take
paper.
your time.
Yep.
Take your time.
which equals. And I'll be honest, I'm gonna have you explain the math on this one, but just,
Okay.
I literally would close my eyes and do a
Okay,
shot
so-
in the dark.
Okay, so
Yeah.
what's your shot in the dark?
My shot in the dark is I'm trying to figure out a correlation between these two.
Well,
and
yeah, so the first thing is we got to look for something where we get toehold, right? So the toehold I would have looked for is to know what is the market return. So how am I going to know the market return? It says security C, right? AR, which is find a
Mhm.
touch. Binary security C and security L, based on alpha. C has a beta of 1 and they're 13%. So now I know that's the market return. So first thing is, do you see
Oh, got it.
how I got the market return?
I do. Yep.
Okay, so now I'm in business. So I got the market return, which equaled the expected return. So that means it had no alpha. So now I look at
Yes.
L. L has a beta of 0.8. It earned 10.1. So now what I'm going to do is I'm simply going to take the market return, right?
Minus 10.1.
No, we can't minus the risk-free because it's not here. So what we're
Okay.
going to do is we're going to take the market return, which was 13%, right? We're going to times it by 0.80.
L's beta. Okay.
That's right, the beta. So it's going to go up 80% of that, not the entire 13. So 13% times 0.80. And what do you get?
I'm not using my calculator, which is
Oh,
on my
I'm sorry,
phone.
you're on your phone. I'll do it for you. Sorry about
Yep.
that. So I'm going to take 13% times 0.80 and I get
10.4.
and it says it's 10.1.
Okay. So there you go. So the answer would be B as in boy.
Well, is that good or bad? Be careful. So our expectation market return was 13%. We have 80% volatility compared to that. And so our expected was 10.4. We would expect to get 10.4.
I understand. Yep.
So it's C, right? We got
C.
negative.
Yes. Yeah. I put B, but it would be C because it returned less than the market with the beta.
If it was 10.7, you would have been correct. And there would have been some
Yeah.
alpha. So just so you have this in your recording, and you've probably seen these on my channel. If you want to give me permission, you can send me the recording and I'll put it on the channel. If not, oh, who cares? I mean, it's up to you.
I'm fine with
That
it.
being
Yeah.
said, though, I want to show you so when you're watching this back, what I did was I took first we had to figure out that the 13% was the market return, right? So that's how we did that. The hint there was that it told me it was 1, the beta, right? So
Yep.
now I took the 13%. And I think a lot of times people just freak out. This isn't, this is fair game. And I think a lot of times people are just so traumatized. It's a trigger and they go, oh my God. Oh, and then I took this, right? And what am I doing? That's the beta. And then when we did that, we got 10.4. And then what I like to do, it's a buffet, do what you like. You don't have to do what Dean likes to do. But I then like to take the return on my scratch papers where I do this. And I like to put that return either above or below that number. Right. And so then I put that there and poof. Right.
So all I'm doing essentially is just trying to fit. I'm using. Okay. Yeah. I mean, I don't know how I'm about to explain it, but all I'm trying to do is get the L's in this case, the position of L's.
That's right.
Compro and use their beta to the market return and compare that to actually what it did return.
Yeah, almost as a test taker. Anytime they tell you security, there's 2 securities in the question, and they tell you the beta on one is 1, that's the hint that that's the market return for you. If they ask you for further information, than that.
Okay, that's locked in now. I hope I get
Well,
10 of
that's part
those
of the process. You
questions.
picked up.
Yeah.
You were never a risk to begin with, my friend. But you picked up some more points just from this exercise as
sure.
well. It's an insurance policy. So, and
Yep.
I actually think that I would want you to test sooner rather than later, right? Because
Yeah.
you need to stick the landing, right? You just need to stick the landing and make sure you don't, guard your psyche and nobody steals your energy, right? On the
Yep.
Uniform Securities Act, if the administrator does not deny an application for registration and no disciplinary proceedings are underway in regard to it, how many days after filing the application do you generally become effective?
A 30.
That's right, noon of the 30th day, right on. Which of the following are disadvantages of index investing? Disadvantages? The test usually loves indexing. I mean, they always are prejudicial in favor of indexing on the test usually. So I'm a little surprised they're asking the downside of indexing. John Bogle's no longer with us, but if he was, he'd say, what?
So 3 is definitely a disadvantage.
Right on.
Index portfolios may not represent optimal performance. I'd say 3 and 4.
Yeah, right on. Good job.
Yeah.
By the way, the test question is actually about 2, right? That they have lower cost structures.
Yes.
Alvin's spouse is a trustee of a trust established by Henrietta Flood, which directs the income from the trust to be paid to Alvin for as long as he lives. Alvin's son Floyd will receive the principal upon Alvin's death. Floyd would like to receive some of the principal before Alvin's death, and Alvin does not object. How should his spouse, the trustee, act in this situation?
Yeah, I'm starting to get to that point 2.5 hours in where I'm starting to have to read everything a couple of times.
I'm with you. I'm with you. That's, I'm thinking of maybe putting in the thing. It's 3 hours, and then maybe there's a 30-minute break. But I'm trying to, for people who are trying to get this mark like you are. I'm also trying to do it, which reflects. And if I put the 30 minutes in there, what I'm afraid of is that we may be building in a respite that people don't really get. Right.
Couldn't agree more.
They're very good at this kind of a question.
I mean, I would say that you really can't go against the terms of the trust.
Right.
Yeah,
They love
so
to
I'd go
give you
see.
questions.
Yeah.
They love to give you questions where if there was ever a time we could do something we're not supposed to do, and our heart's in the right spot, you still can't do it. Under NASA's rule of unethical business practices of investment advisors, investment advisor reps, federally covered advisors, and investment advisors fee,
I'd say A.
right on.
I was looking for the one in there about the capital gains or the asset appreciation, but
Yeah, like I said, we look for our answer. I like it because we should project our answer. And then when our answer isn't there, then we go back to the drawing board and say, okay. Uniform Securities Act is designed to protect the general public and not restrict investment activities of institutional or professional investors. Any offer or sale to any of the following would be considered exempt from the registration and advertising filing requirements of the Uniform Securities Act, except
the uniform is designed to protect the general public and not restrict investment. I mean, it's not an A or D for me.
that's right.
Um.
Oh, well, I'm not sure.
Uh-oh.
Yeah. Just reading the question again. So before you said that, the Uniform Securities Act is designed to protect the general public and not restrict investment activities of institutional or professional investors. Any offer or sale to any of the following would be considered exempt, except. So I am thinking that three of these answers are institutional or professional investors. One of these is not an institutional or professional investor.
One of these is not a professional investor.
So again, it's a buffet. A buffet.
So I know I'm throwing C out immediately. I mean,
Yeah,
that's
that
definitely out.
C is
Yeah.
capable of protecting their own assets.
Yep.
They can protect
Um,
their own assets.
Let's go with B as in boy.
We got you. The chief executive officer is a retail client in my state entitled to the protections of the Uniform Securities Act. That CEO is a living, breathing human being. And he is on the Uniform Securities Act, a retail investor. Right. So the answer here is A. A
Yeah,
savings.
so got it. But I said A or D, and then you said, "Oh well." You said no.
Oh,
So you
I'm
made me
sorry.
think it was either B or C. But it's
That's
all
on
right.
me.
No,
No, my bad. My bad. I just was reading again. I said, let me read again because I wanted to catch it, whether it's the
got
accepted.
it.
It's me. So
Yeah,
I've been in right
that really
direction.
was my gut instinct.
Okay,
In
cool,
all
cool.
honesty,
Okay, my
hand to
bad.
God.
My bad. Don't listen to me. Strategic Capital Asset Managers is an investment advisor that is registered in 5 states. In lieu of preparing a fancy brochure, Scam is permitted to provide its clients with a copy of its. This is very much a test question.
Okay. Scam is investment in 5 states. Oof. A.
This is a bad miss. I haven't said that to you very often. You should definitely know this is Form ADV Part 2A and 2B
Okay.
that we use in lieu of a brochure. So that is very much a test question. The answer is D.
Yep, I have not seen that, but no, I will remember that 2A and 2B. Got it.
An agent made written disclosure to an employing broker dealer. She intends to execute a series of private securities transactions with individuals who do not have accounts at the broker dealer. The agent did not acquire express written permission from the broker dealer and did not receive compensation for executing the transactions, but she did receive a written acknowledgement of receipt of the agent's notice. In this case, the agent.
A or D, but I would say D.
That's very much a test question. The test will be very much easier. It'll just say an agent of a broker dealer sells an investment not sponsored by his employing broker dealer without notification or permission. This is a prohibited practice and is known as, and you got to come up with selling away. It's a
What's a
strike.
matched order again?
Match order is where you and I are buying and selling. There's no risk, and we're just trying to give the false impression of
Oh,
volume.
that's right. Manipulation. I remember that one now. Okay.
A grantor retained annuity trust would not be used to reduce.
One and two, A.
I think you may be on the backside of the question. There's no income, gift tax or estate tax, but the grantor is going to pay income taxes on the trust income. And
It
it
was on
says
it, but yeah,
would not be used to reduce. So the
yeah,
answer is
yeah.
actually three only. So I'm not sure if you are on the back side of the question. If it said would be used to reduce estate or gift taxes, you would have been
Yeah,
correct. It
yeah,
said would not be used.
yeah.
One of the differences between call options, rights, and warrants is that pressure's on, man. You've been pretty good at options as compared to most 65. So let's see if you continue to hold serve on derivative investments.
C and D, I think, are out.
Right
I know
on.
D's out. I know that.
That's right.
So warrants generally have a
That's
strike
right.
price below.
And corporations issue rights and warrants, not calls. So you're right. C is out. So it's either A or B.
Yeah. And warrants, I believe, usually have a much higher strike price
That's
than
right.
market value
That's
because
true.
they last forever. They're
All right.
in perpetuity. So B, yeah.
You hold serve. All right. Under the Investment Advisor Act of 1940, the exclusion for providing investment advice that is solely incidental to the practice of a profession is not available to.
B.
Right on. Late. I wish we had more of those memory aids.
Yep.
Of the following stocks, which would be the most suitable for a risk adverse investor?
So I'm gonna throw A and B out.
Right on.
Late in the economic cycle. So I'd say D.
Good job, right? Got to eat.
Yep. Well, late in the economic cycle, that was the big difference. But yes, yeah, there you go.
Awesome. Yeah,
Defensive.
absolutely right. Yeah. You know, large cap cyclical companies. I mean, that's like a Caterpillar, right? They sell like excavators and rock trucks and bulldozers. And, when things are good, they're good. But you could certainly delay buying a new bulldozer or excavator. Reason why a corporation might issue a convertible preferred stock would include.
D.
Giving those shareholders an opportunity to future success, does that actually benefit the corporation? I don't know. I mean, you're talking about what is in it for the person who buys it, and you are correct.
Oh
And
yeah, I guess I didn't think about
I'm
that.
I'm just looking if I like B, but I think you're right. I like that a lower cost to the issuer than would be called. Reasons why a corporation might issue a preferred stock would include. No, I think
Wouldn't it be
that's
the
the best
same
answer.
cost whether it was
Yeah.
preferred or bonds?
Yep, you're right. I think you got the right answer. I like that. Your answer is good. Starflyer Mutual Fund, regulated on the Investment Company Act of 1940, wishes to change its investment policy. It may do so with, this is very much a test question.
So I'm thinking it's either B or D. I would throw the other two out.
That's right.
Yep.
Yeah.
And I feel like a regulator wishes to change its investment policy. It may do so with the approval of.
So it's a growth fund and now it wants to be a bond fund.
Yep. Let's go with B as in boy.
You got it, right? That's
Nice. Okay.
Yeah. Yeah, that was a 50-50 you got right. Woohoo!
Yeah, literally. Yep.
Which of the following statements concerning international direct investing is correct? So you're not going to do it through an ADR. You're actually going to the foreign country and buying foreign securities.
I'd say D.
The addition of foreign securities to a portfolio may result in increased portfolio risk due to the different movements of foreign markets and U.S. markets. Which of the following statements concerning international direct investing is correct? I like that one. I like that. Let's see what our other ones are. The rates of return are generally less. No. Foreign markets are usually mature and offer no. I like C as well. So I'm just
I did
trying to
too.
decide. Yeah.
Yep.
So I don't
But
know.
with Google, I mean, I think I can pull any international or New York
Yeah,
Stock
let's see.
Exchange
I don't
listed
know.
state.
I don't know. I
Neither
just
do I.
so let's see. The addition of foreign securities to a portfolio may result in increased portfolio risk. I think that's correct. Due to the different markets and well, I'm going to say the different. Yeah, I don't know. We'll see. I think that's iffy one.
128. Yep.
Yeah. If an investment advisor wishes to engage in an agency cross transaction involving advisory clients, it would be prohibited.
I think it's B because you can't recommend it to both sides.
That's exactly right. Yeah. Then I'm in a position of trading against my own recommendation, which is just unethical.
Yep.
An investment advisor rep of Federal Advisors registers with.
This you're gonna shoot me if I get this one wrong. It's obviously either B or D, but it's late in the game for me, and I'm trying to
Remember, it's asking about you. It's not asking about
I
Prudential.
know. D.
That's right. Right. You are registering.
Nice. Absolutely.
You're registering.
Yep.
So, anytime they say Federal Government Investment Advisor rep, I go, oh, that's me.
Yep.
Are you keeping an office in New York?
I have 2 offices in New York. Yeah, and I'm gonna open my
You're
3rd here in
registered
Florida.
New York, and you're registered in Florida, right?
Yep.
You can have as 10,000 customers in New Jersey and not as long as you don't have an office. If an economist were to describe defensive issues, he would probably not include companies that produce.
D.
Yeah, that's cyclical. The major risk would be I'm building this off-grid location. My contractor showed up with a trailer and gave me the bill for the materials. I go, really? What do I know? But that certainly doesn't look like much for that. You're building materials for my money. The major risk for highly rated corporate bonds is so AAA credit like Johnson and Johnson,
Okay.
Microsoft.
Yep. Sometimes they get highly rated, I think worse for some reason. I don't know why, but
No,
yes,
highly
highly
rated
rated, that's good.
AAA,
Yeah.
right? Best you can get.
I think they're still susceptible to interest rate changes.
Yeah, like
C.
treasury bonds, right? Same thing.
Yeah, naturally.
Which of the following is used in technical analysis to attempt to modify fluctuations of stock price or long term and give me a visual representation that is much more attractive into a smooth trend?
Which of the following is used in technical analysis to modify fluctuation? Okay. I mean, I don't want to say A because it has the word trend in it, but
Yeah, that's right. Not A.
yeah. I know support and resistance, but that's not really smooth anything about that when I look at a chart. So I would say C.
Yeah, you're correct. It's
Okay.
A smooth looking chart. Makes it easier for me to kind of see the trend, if you will.
That's right.
I should tell Google to do that. Google on my YouTube channel provides me with it's called analytics. It is basically like technical analysis of a YouTube channel. And I just every time I look at the channel, I think, oh my God, if this were a stock, I'd be all over this thing, But the bad side of that is now if I, have a series of lower lows and lower highs, I'd be obsessed with it. But this just gave me an idea to call Google and say, hey, you know what you should do is do a moving average up for us YouTube creators so we could actually smooth out that line and kind of see, where it's at, right?
Nice.
An investment constraint that is unique to private foundations is the requirement that
I don't think I've ever seen anything about a private foundation,
either have
but
I, either have I, and this is
yeah.
where I'm thinking myself as a guy who I guess I'm blessed to know a little bit about this as a voyeur, and as a voyeur on like the Gates Foundation, that's a private foundation. And I happen to know this answer just because
It's
it,
either A or C. I mean that would
that's
be
what
my guess.
so what would you think as a philanthropist would be the answer, that we have to invest or we have to distribute?
C. My gut said C.
It is C. Yeah.
Yeah.
Yeah, Gates, that's like billions of dollars they have to distribute. The term security would include which of the following? Yeah, it's kind of a weird one.
Um. Huh. A.
Yeah, the indentures are the bonds, but
Yeah.
the term security. Now, the indenture, it would be debentures. Indentures is the written
Mm.
promises. So I think this is kind of a tough one. But I did tell you, you took exception to what I said earlier, that if the MSRB says it's a municipal security, well, then by God, it is a municipal security. And I think I told you that the MSRB has said that 529s are what?
Securities. I
Yeah.
mean,
So I
I'm
got to,
still shocked by that, but yeah.
yeah. So that means I'm
Okay.
not going to have a prospectus. I'm going to give you some kind of a document, like an official statement to decide whether you want to make an investment into a 529.
Hmm.
Right. Nevada, our 529 is managed by Vanguard. And so I would be putting that money into a Vanguard fund.
Got it.
Which of the following is true regarding anti-fraud provisions of the Uniform Securities Act?
C.
C, right on. Owners of private activity municipal bonds might find themselves, this is very much a test question.
Hmm. Can't say I've seen anything about this one either, but I'll work my way through it the best I can.
Very testable. So I call you up, I say, hey, I got some good news and some bad news for you as your accountant. I've done your taxes and it looks like don't owe any money. And you go, why is that bad news? I said, because now you're subject to the alternative minimum tax. I'm going to have to recalculate because everybody has to pay something. And so now I'm going to recalculate using the alternative method and you're going to owe taxes. And what we're going to do is we're going to call certain items now on your tax return preference items, meaning
Yep.
that for most people, they're tax free, but not for you. You probably know that private activity bond better as an industrial development revenue bond.
Definitely.
And the
Yep.
IRS says you're supporting not a public purpose, but a private activity. And therefore, if you are subject to the AMT, it is taxable. That is very much a test question. Do you want me to
Okay.
mark you
Well,
wrong on this one or mark you right?
yeah, you know what? Honestly, I wouldn't have picked B, in all honesty.
Put
So
that
any other answer is fine, but I will going forward if I see that.
Each of the following statements about post-registration provisions is true except post-registration.
C.
Yeah, they have reciprocity. So,
Yeah.
right. So, yeah, see. Which of the following statements about investment constraints is least accurate? Least accurate.
Diversification efforts can increase volatility. Wow. Brain's really slow right now.
We got one more. You're doing fine. You're doing great.
Yep.
It's always a pleasure. I mean,
Diversification.
I know it's a slog, 3+ hours, but it's always at my end, very gratifying when somebody's doing this, and I feel like, okay, they're going to make their mark, and we know they're going to make their mark. When sometimes when we're doing this, I go, oh my goodness, oh, got a lot of work to do still. I call it the 747 principle. It takes a 747, 120% of rated power to get off the ground, nose up, seat back. It only takes 70% of that 747 to be in the air. And right. And so I like it. You're in the air. All you got to do is stick the landing, right? So and we just want to make sure that we don't run out of fuel before we stick the landing, right?
So I mean, there's a couple that seem terrible to me, but are not likely to worry about liquidity. So I would throw D out.
First thing, yeah, D is the worst one, right? Because that's just true in any universe, right? If you have a short time horizon, we need to keep you liquid. The one they love on the test is about a house. They have a question about a person sells their house in state A. They've been relocated by the company to state B. They tell you they're going to rent for 6 months, find a neighborhood they like it, and buy a house. And the question is, what should they do with the proceeds on the house, knowing they're going to buy in 6 to 12 months? And you would say a money market security or money market fund.
Yeah, but they're asking for least accurate here, Dina. Am I mistaken on that?
Investors with short-term horizons are not likely. No, they are worried about liquidity, right? Least accurate. Being an credit investor increases investment opportunities. True. Unwilling to invest in tobacco stocks is a constraint. That's true.
Yeah.
Diversification efforts, buying and selling securities, can increase. This is the only answer I think I might have been 50-50 on. Can increase tax liability. Yeah, because you're buying securities to diversify. So I think that's kind of true. But if you don't sell, you don't have a tax liability. But D is just not true. If you have a short time.
Yeah, I agree.
In addition to normal required filings, an investment advisor maintains custody of client funds. Bill would be required to complete. So you're actually going to have custody of a client's monies and securities.
Oh, I saw this one somewhere. It's 1 and 2 are out. I think it's C, ADVE.
Yeah, form ADV.
Yep.
You are correct.
And ADVW is some kind of, if you're changing.
You're withdrawing your registration, right?
Yeah, that's right. Yep.
All right, let's see. Oh, that is very impressive. Very, very impressive. Let's see. I think we talked about most of these along the way.
I didn't see what the score was. What was that?
I'm sorry. You're on your phone. 80.71%.
All right. That's an increase.
That's definitely, listen, I'm very pleased with that as your tutor. I tell people 70+, I'm happy. So higher the better. If I like 70s, 80s are even better.
In your honest opinion, would you say that out of all, and you may not know the other resources like Past Perfect and STC and
you said you got TestKey. TestKey is going to give you a pretty strong score correlation wise.
Yep. I haven't used their test, but would you say Kaplan is fairly accurate as far as the material relative to the test? Okay.
Absolutely. The guy at Kaplan, who is the subject matter expert, I'm just going through. Yeah. Do you know Chuck? You see him in the videos, or have you?
No, I remember you talking about him a bunch, and when I get frustrated, Chuck, I get frustrated on the words, I say his name in vain.
Yeah, he's into this in a good way. I mean, he lives for NASA exams, and yesterday we got into it. I'm not allowed to ask like question 35, but I can say, what do you think we could have done a better job on? And him and I were talking about a debrief, and I'm one of the few guys who takes the time to give Chuck debrief, and I know how much he loves it. But he was saying the person who gave us the debrief was confused about a particular thing. I go, well, no surprise, Chuck. I mean, these people are not reliable narrators of their experience. They're stressed out. I said, but hey, any debrief is better than no debrief. So let's not perfect debrief beat the enemy of good. And he
Yeah.
backed up. He goes, "Oh, you're right. I could always find another practice question right based on it." I go, "There you go. There's the right attitude, Chuck." Right, so,
Nice.
yeah. And then he always asks, "Did they pass?" I go, "Well, if they didn't pass, I wouldn't be sending you the debrief, would I?" Yeah, I think we got pretty good. So I think you should feel really, really good when you.
Let's take a look at, yeah, just real quick, 128 and
Yeah, what did we say? I
139.
think I wanted. What did you want? You wanted D, and I wanted C.
Yeah,
Let's see.
you're the man.
In general, foreign investments don't have the transparency of domestic ones. I agree with that. Now let's see if he's going to address your thing, because I think yours is right too. I just, I'm not sure if he's going to address that. Let's see.
Wow, definitely, yeah.
Rather than directly investing in the foreign security, trading the ADR has the advantage of full disclosure requirements. Okay. So he's still now just making the argument for C. I'm seeing if he's going to make an argument about why D is not correct. Including foreign, okay. Investors may earn higher returns investing in foreign markets, and including foreign securities to lower risk through greater diversification. Okay, so I think, as he's saying that correlation is different than I'm not sure what he means by that. This is because, oh, here we go, maybe low correlation with US. Although securities markets in most developed economies are mature, that doesn't mean they can't grow. I'm not sure. He didn't really tell us why he doesn't think D is correct,
Okay,
but
now I know. I
my
just don't
rational,
understand. Yeah,
well, my
readily
rational would
available.
have been C is better,
Yep,
and I would
agreed.
have had an ADR in mind. So I was
Yep.
tutoring a guy who is a billionaire guy, and he has to take the test, kind of ridiculous. And he was struggling with ADRs because he said, I forget how I phrased it, like, you can't buy, I said you shouldn't buy. He goes, "What do you mean? I bought a Japanese bank and was one of my best things." I go, his name's Chris as well. I go, "Chris, most investors aren't buying banks in Japan, lock, stock, and barrel. They're not private equity guys like you. So you got to dumb yourself down a little bit, my friend. This is a test about retail investments, not private equity funds."
And you don't have to go to it. Yeah, okay, it was right. I just wanted to make sure
Yeah,
we're good.
yeah. I really think you should be pleased with that performance. So again, you have the video. You can
Okay.
really write that. It's a transaction, not a transaction relationship. If you need me, don't hesitate to call. Let me give you my stop the